I'm so much better um, with seeing the setups, right? I'm so
Uh-huh.
better with my understanding of why a move is going to happen and maybe even when it's supposed to happen, what I want to do. So, earlier in my trading journey,
Hmm.
it's a wonder that I didn't lose more, I think, because it's almost like you're walking in a new space, house, picture yourself in a new house or whatever, pitch dark, no electricity, lights are off, no natural lighting. You don't know where the
Okay.
furniture is, you don't know where the steps are, you don't know where anything is. You're just kind of walking and feeling around. That's kind of how it is, how you are as a new trader. And then as you start to learn, maybe smart money concepts or whatever you're learning, you kind of get a feel, maybe a little bit more lighting comes into the room, maybe some natural light, maybe a lightning strikes and you see silhouettes of furniture. Well, now I just feel like the lights are on, uh,
Yeah.
I have a great understanding of why the market did what it did. And it's going to do more, right? Uh,
Yeah.
Now I can sit and wait for these setups. And there's a reason why these successful traders don't trade often. You know, they catch the move that they're anticipating, and they make a lot of money with that move. And now they're out of the market. They don't have to play with these little up and down, mood swings or whatever that the market does throughout most of the week.
Yeah.
So, um, if you do not know what happened on Thursday, really it happened overnight Wednesday. Um, the JPY pairs started cooking off, right?
Hmm.
And that solely based on the real recession, right? Uh, this is the end of the quarter. The numbers came out. Banks are making adjustments. Like I think everybody understands that the recession is going to happen. It's not
Yeah.
even. It's going to happen. And the Fed, which is our Federal Reserve Bank, they're not worried about that. They're worried about the inflation. So they're going to continue to hike these interest rates. Uh, and there is no financial expert. Well, there's no historical information uh, that says that we can lower the interest rates. I mean, that we can lower the inflation to 2% without causing a recession. Like that's never happened in the history of America. Anytime that we've lowered inflation, there's anytime inflation has dropped more
Yeah.
than 2%, it's been a recession. So that's the historical data. That's what everybody is going by. And that's the understanding that those are the rules that everybody's playing by.
Yeah,
So
but Powell also said that we hadn't had the, well, no, he said the economy has really been reset by the pandemic. So
I,
do you think those same rules apply?
I hear you. Um, you've had a boyfriend before, right? Did?
Yeah.
So
I hope
he
so.
said, he said he's different. He doesn't cheat or whatever the case may be, right?
Uh-huh.
At the end of the day, maybe when things played out, you probably found out that he was still a dude. And
Yeah.
what I mean by that is it doesn't matter what the job market is like or whatever. The If you look at the numbers say that the economy is slowing down, right?
Mm-hmm.
Everybody backed off of their projections. Why? Why is the economy slowing down?
Hmm. The only thing I can think of is the pandemic. Well,
No,
also what,
Inflation.
President of the interest rates.
that's right.
No, there isn't cheap money.
If you want to buy a house, you know, if you just do the math, go to a mortgage calculator. I mean, and see what the difference is between your monthly payment. If
Okay,
it's
let
a
me
number and a 5% number.
let me say something about the interest rates, okay? Because I have seen them when they were 10%. I was selling mortgages when they were 10, 11, 12.
I
on a
understand
note.
this. But
So
I'm
start
about,
telling me that the interest rate, oh, it's 5% now. I'm like, girl, please.
but then, but
Then everything is relative, though.
where we're coming from. We're coming out where we,
Relative, yeah.
I'm sorry, where we just were to where we are now.
Right. So I agree with you, Des, because in the 70s and our parents paid like 18%.
Yeah.
So I get what you're saying, but you know, you got a bunch of people out there that have never seen interest rates that high. So everything is relative. And you know, if you just bust out a mortgage calculator and a year ago, 6 months ago, people could get a house and pay 2% versus 6%, you know, they are more reluctant to do that now. And the other piece of it is not just housing. If I'm some big Wall Street firm and the interest rate is 2%, 3%, historical return rates are 7 to 8%, I'm going to take that risk. I'm going to borrow the $1 million, the $5 million, and pay back 2% because I know the market is going to return 7 or 8.
Yeah.
But when you raise those interest rates and you close that gap, if the market traditionally returns 7 or 8%, but I got to pay 6% on the money, I'm not taking that risk because the margins are too close together. So
yeah.
Everything slows down, which causes a recession.
Well, and even on a lower scale, people spending money drive the economy. You know, that's the fuel. But Des, when you got to spend double to fill up your gas tank, how much money do you have to go spend?
That is the only thing that's bothering me because I have a Range Rover.
There you go. When you go to the grocery store and you buy your groceries, how much money are you spending now?
Des, you making that big money, what difference will it make to you? Making that big money, I mean, what difference will it make? I mean, you just
it doesn't matter. It doesn't matter. And I'll tell you why. It doesn't matter because when I got the Range Rover, I was doing Amazon, right? Selling on Amazon. And it would still bother me, even though, you know, I was bringing in pretty decent amount of money every month. It still bothered me to fill up the gas tank because that's not something I really want to spend my money on. I do it because I have to, but I'd rather spend money on fun stuff than spend, well, at the time it was like $50 to fill up the tank a week, right?
Now it's double this.
Well, yeah, I know, because the car is parked. Trust me, it's just sitting there. Because I'm like, no, we're not touching that thing. Because now it's like $100. Yeah. I'm like, no.
Yeah, and if you think about it, somebody like you're fuel conscious. You have the money. There are other people out there who don't have the money.
Right.
Maybe they were
basics of currency trading to you. It just starting an online.
What?
Sorry, that's me. Hi, everyone. Sorry I'm late. Why are you laughing, Todd? Please.
Because your grand entrance.
No, sorry, I didn't know. I thought I was muted. But how is everyone today?
Fine, and you?
I'm good, thank you. Could be better. My computer was working. I think I just had everything running for too long. It was due a restart, to be fair. So has Todd covered anything?
No.
Okay, cool. I'm not taking over the whole session. I'm just going over that that trade and how I made 5,000.
Okay, let me finish my thoughts and I'll give it to you.
Oh gosh, no one cares. Anyway, well,
no, Leander, no, wait.
I'm joking. He knows I'm playing with him. He knows.
Oh, the abuse.
He enjoys it anyway, don't you?
The abuse.
Okay, yeah, go on. I'm just getting ready, so yeah, carry on.
Okay, so somebody like you who has the funds, you don't want to spend the money, but there are probably 80% of the people in America aren't solvent. You know, they spend more than what they have anyway. So when the gas and food prices went up, now there is no money to go and do the fun things or go put into the economy to keep it flowing. So that's why these companies are pulling back their earnings, right? Their earnings estimates and whatnot. And that's why the slowdown is happening, because the inflation is just too high. I mean, I don't care what society you live in. Nobody's really paying 8%, or nobody's gonna survive with 8.5% inflation unless you find a way to make money other than a job.
Yeah, that's true. That's true. Yeah, that's true.
So with that being said, we as traders, we have to understand what that means and where we can look for the trade setups, right? So, you know, I think I've been saying this. I know at least for the last 6 months that anytime there's uncertainty in the markets, the JPYs will get stronger, right? The yen gets stronger. So that means if you have a risky currency paired with the yen, what's a risky currency, guys? GBP. GBP. If you have GBP, JPY, you should automatically look to sell that, right? And if you go look at your chart on what happened over the last 2 days, how much GBP, JPY drop? Does anybody know?
Mm-mm.
Well, I think on Friday it dropped like 300 points, 300 pips. So, let me see if I can pull this chart up just to make sure. I don't want to misquote. This is a day chart. Oh, 374 pips, excuse me. So if you get a 400 pip drop in a day and you don't make any money, man, I have concerns about you and your vision as a trader. And don't get me wrong, like there's plenty of times that this has happened to me, but it didn't happen to me this time because I understood where to look for my setup. You know, I understood what the risky currency was, the GBP, and the safe currency, the JPY. If the JPY is getting stronger and the GBP is in the front, I'm selling that joker. Now, I didn't know it was going to drop 374 points.
Yeah.
But I knew with confidence that I could hop in there and sell it. As a matter of fact, I sent a message to everybody to say, you know, sell your JPY pairs. I didn't tell you to sell GJ specifically. I was selling UJ for the first half. And when I sent y'all that message, I switched to GJ because I understood that I can get more bang for my buck selling the GBP.
Todd, what is that black line?
It was a break of structure line.
Oh, I thought that was Alicia's trend line. Okay, I just wanted to clarify.
Oh, yeah. No. But, no, it's not. But, you know, the important thing is, guys, is this, it retraced, right? There's more selling to come. And I think that we can at least expect for it to drop another 350 points, right? At least to the bottom of this wick over here. Maybe even further, you know, like this recession could very well turn into a depression. We don't know, but we know this thing is going to be, we can anticipate that it's going to be dropping. So why am I bringing this up? Because when you have these moves, these cascading moves, you have to take advantage of that move, right? Like we theoretically, if the market drops 300 points or 300 pips in a day, in one day of trading, I mean, you can make at least 1 month of salary. This is one day, 300 points. 2 days. Yeah.
Hey, can you explain? I mean, the way you're talking about it, it's like this was obvious. This was about to happen.
Yeah.
Can you explain why a little more detail? Because
okay, let me back up. Thank you, Terrence. Did you just get on the call, Terrence?
no, I've been on the whole time, but what I'm looking at now is isn't this an uptrend?
So all right,
retrace is down. Like how in the world am I supposed to look at this and be like,
okay, thank you.
oh, this thing about to drop 300 points?
Thank you, T. All right, so let me back up because maybe everybody didn't understand the dialogue that we were having about the recession and the end of the quarter reporting. So let's talk about what happened last week. Last week, we got our earnings, right? It's the end of the second quarter. They missed the mark, right? Does everybody understand that?
Yes.
Correct. I saw that. You talking about the GDP earnings?
What's that?
You talking about missing the GDP projections?
Yes, gross domestic product, but Wall Street, like everybody, every company in America is scaling back, or 99% of the companies in America are scaling back what they think they're going to make, right? There's weakness. There are signs of weakness. This is the second quarter in a row that there's signs of weakness, and that the economy is showing the economy is slowing down. Inflation is still at 8.5 or 8.6. So there's no signs of that slowing down. So the Fed,
unemployment went up as well, didn't it?
What's that?
Unemployment went up.
I think employment numbers are still strong, but that the employment, that's a different story. But I'm just painting a picture here. This is why it was obvious of what we should have expected here. So if the economy is slowing down for 2 quarters in a row, what does that mean? Look at the definition of recession, right? So inflation is high. So the Fed's policy, the Federal Reserve Bank, which controls the money policy in the United States, the Fed is saying that they're going to remain hawkish. They're going to keep raising these interest rates because they're going to tackle the inflation. That's objective number one. They don't give a crap about if it slows down the economy. That's not the priority. If it slows down the economy, oh well. There won't be a soft landing. We're going to we got to put the inflation fire out. So the economy is going to slow down. So this. We all know this as traders, right? We're speculators, so we observe this. We understand this as traders. So as traders that understand that we're going to go into a recession, we're driving ourselves into a recession. The Fed is driving us into this recession by slowing down the economy because they keep raising the interest rates up. That introduces risk into the marketplace. And when there's risk in the marketplace, I mean, that's the sole reason that the US 30 has been dropping since January, guys. That's why we've been selling US 30 since January, because of the higher interest rates. And this is what makes this trade setup so obvious, right? So at some point, as the interest rates climb, the risk is too high for the banks or the investors. So, you have the interest rates climbing. You have this war with no end that's going on over in Europe. Those are two factors that are in the market playing out at the same time that eventually is going to make people with a lot of money put their money in a low risk vehicle. And the low risk vehicle is what? JPY, CHF, and USD. Let me say that again. JPY, CHF, USD. Those are the three safe currencies. And I say that with air quotes. So when these JPYs started to sell, I knew I could get the biggest bang for my buck in GJ because the British pound is the riskiest currency. So all I'm doing as a speculator is I'm pairing two currencies, one with the greatest risk with the safest currency. And I'm going to sell it in this case because the GBP is listed first and JPY is in the rear. JPY is going to get stronger. GBP is going to get weaker. So the reason why we should have expected this trade this week, I expected it next week, is because this is the second quarter. This is the end of the second quarter. And the report said that the economy is slowing down. The report said to me that we are in a recession. And I think it said it to most hedge funds and banks too, because they took action. Does that make sense?
Yeah.
Terrence? Other people who aren't saying anything?
Yeah, I mean, it makes sense to the fundamentals, right? To be aware of what's going on and to try and, capitalize on that. But like you just said, you expected the drop to happen next week.
Doesn't matter. So this is what I'm saying, Terrence. I knew the drop was coming, but this is how it is in the market. None of us will ever, no, they're not going to email any of us and say, hey man, we're going to drop this market right now. Right? It doesn't work like that. But
right.
You understand that the season that we're in is we're going to expect this drop. It's kind of like you were a college quarterback, man. You played college ball, you played quarterback. They didn't tell you when they were blitzing you, but you had an idea of when it may come. But maybe you were expecting blitz on third down, but they blitz you on second down. Right?
Right.
And you might have known by the formation, you might have known because somebody tipped their scale because they leaned forward a little bit. But I mean, I'm sure y'all did film study and you studied, you had your keys to look at, right?
Absolutely.
So it's the same with this market. Our keys were the quarterly reports, right? We knew the war was already out there, so that was a non-factor. But those quarterly reports were the tipping scale. We knew it was going to sell. I knew it was going to sell, but I didn't know it was going to cascade on Thursday going into Friday. I thought it would cascade, starting out this next week.
All right, so what I understand that. So you, based on the fundamentals, you were anticipating the drop, and we all should have been anticipating the drop because of those fundamentals, because of the quarterly reports, because of what the Fed was saying. So then what keys were you looking at on the technical analysis side to pair with the fundamental side? Because I'm looking at, based on things I've heard you say is, you trade against the trend, you are asking for trouble.
Right. So let's look at it. Let's look at it, Terrence.
And then I'm looking at the daily chart. I don't see, okay, go ahead.
This is exactly what happened.
Can I just say also that anyone that's come up here because I'm doing US 30, how I made that money, basically everything that Todd just said is what I do as well. So I look at, you know, the fundamentals, the news, and then I go to the charts to see if everything's gonna play out like the news is saying, because the news is very much a fundamental part to US 30. I just thought I'll add that in there. So just make sure you're listening, guys, because he's speaking the truth.
All right. So this is what happened on our 5 o'clock call. We saw this bearish OB on CAD JPY. All right. What we said was we're going to buy this pair up, right? We're going to buy this wick up into the order block and sell it, right? We thought that we could get a 50-point move up. But what
Can you adjust your screen a little bit? I can't see the top.
You see it now?
To bring it down just a tad more. Can't see where you point your mouse at the top. There we go.
Okay, this was a daily bearish order block.
Gotcha.
When we were on the call, we said we would buy this up, and we thought it would be a 50-pip move, you know, up. I think we broke it down by the 2-hour chart, right?
Okay.
We figured it would move up about 50 pips. Well, as soon as we got off the call, I put my buy position in, and I'm in here, and it was going up. And then it stalled out, right? And when it stalled out, it kind of started selling rapidly, right? It wasn't one of those stall outs and it dropped a couple pips. Like this thing started cooking.
Okay.
And it cooked pretty fast. I think it went from 0 to 60 pips, probably
like 15 minutes.
Yeah. Like it was no games in it. You know, it was a pretty good melt. I think it was right in here.
Okay.
But anyway, so once it started melting, I looked at the rest of the JPY pairs. And yeah, UJ did, Kenya. So I looked at the rest of the JPY pairs, and UJ was another one that I started selling. And
okay,
I sold that to, yeah, this is the exact one. So I sold that to this first break. And then, you know, my senses took over, my thought process took over, you know, the euphoria of the big numbers kind of subsided. And I said, man, I can make a lot more money selling the JPY. So I think I sent everybody a message. I waited for the retracement, and then I got into GJ. And GJ really started cooking. So it was just a matter of me understanding what would have paid more. UJ paid pretty good, you know, because the USD is the safe currency. But it probably didn't pay like GJ would have paid. You know, Chef JPY paid pretty good too. But GJ paid the best. Does that make sense?
Yeah, that makes sense. Can you go back to that, either one of the daily charts, or I mean, either the CAD one or the GJ? I just wanted to ask you something about the top of the daily chart to see if that matters.
You wanted to ask me something about what? The top of it?
The top of the daily chart on the CAD JPY or the GJ. You pull it down just a little bit. Okay, does it matter, like on that you see that first major push up?
Right here?
No. To the left, where all those green daily candles.
Right here?
No, farther to the left side. Yeah. Yeah, that big move up. Where's your
Down here?
mouse? In June, all those daily counters up right there. Yeah. Does it matter that it didn't break structure going back to the upside on the next up move? Is that like an indicator it's reversing the trend?
Well, yeah and no, right? So, I mean, if you just look at the chart on a naked level, you can say, yeah, right? But you have to understand that this is still, right? If you look at the moving average, it still hasn't broken down yet.
Okay.
Right? Only thing it's really done is go back to the moving average. I mean, it's going to break, but to look at this chart and not know the fundamentals is kind of an injustice. It's not even kind of, it is injustice, because if the fundamentals weren't in play, we'd still be going up. The ugly truth is the Bank of Japan has done zero as far as raising interest rates. So they've done zero to strengthen their currency. So their currency is trash on the open market. Honestly, they're weakening their currency on purpose. It's no different than what China's doing.
Right. And I remember you saying that would mean that they would have kept pushing up, right?
Yeah, yeah. So without the fears of recession and without that war, I mean, this might be way up here somewhere. So, I mean, we understand how to trade that too as traders, but because we introduce risk, you know, by having two negative quarters or 2 quarters that miss the mark, then we need to start pushing down. I mean, people, these pairs are going to sell against the Japanese yen because the writing is on the wall.
Gotcha.
If you look at every pair, you know, on the JPY tree, they're all the same. You know, you're seeing that we starting to cook with Crisco.
Hey, I got a point to make, and I'm kind of an unbiased opinion here because I don't fuck with pairs. But I think, you know, last week you made such a production of telling everybody how Japan was debasing their currency, and basically, you know, that any pair up against the JPY was gonna be stronger and basically go up. I think that's probably why people didn't anticipate the move, because what I took away from last week as a guy that doesn't screw around with currencies was basically you buy whatever's against the JPY and, you know, you're going to make money. But like you said, now today you're saying, hey, this risk was introduced in, you know, recession, blah, 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 you know, safe pair JPY, which I think we understood that it was a safe pair, but because, you know, they've done dick to improve the currency, I just think that probably people went away thinking that you know, that pair was gonna get lambasted up against pretty much anything.
I can understand that, and I bought UJ for its up run, but I don't think anybody can ignore the bearish order block. We talked about this, and we weren't going to sell this CAD JPY past the moving averages for the people on the swing traders call. So really, this move we were looking to make was about 100 pips from this order block to sell down. That's what we were looking to capitalize on. Now, you know, you can see this wick, it went a lot further than that. So it went 160 pips. And then it drew back. It's still at the moving average. So there's still room for it to cook. But my point is this: the market is fluid, and it's no different than somebody flying planes into the World Trade Center. Everything is what it is until there's a real life news event. So you have to understand. Kenya, please, and everybody else on the call, I need y'all to understand that Forex is not about technical analysis, right? And what I mean by that is the charts are cool. It's cool to trade the charts, but we can't just sit back and say price is going to move to the 78 and move a different direction. The fundamentals drive the market. The fundamentals drive the market. The raising of interest rates, the lowering of interest rates, the war, the crunch on oil, the fundamentals drive the market, right? Those quarterly reports drive the market. Yeah, the market will move to the 78.6. It'll ebb and flow. But what I'm telling you is you need to anticipate the JPY getting stronger. Go read your news articles. The JPY is going to get stronger because there's risk in the market. There's recession fears. Nobody wants to lose their money. So, the conversation started out like this conversation is about anticipating the move. Now, just because I anticipate a move doesn't mean the market has to respect my anticipation. The market still has to make the move. And I think that's where the problem comes in with a lot of new people who try to trade, because there's an anticipation. I can tell you what I think is going to happen, but the market has to play out.
Hey, Todd,
I'm sorry, go ahead.
Let me ask you this. So basically last week when the news came out that the JPYs were being stubborn and Japan was being stubborn, they weren't gonna raise their interest rates, and we thought everything was gonna push up. And that was kind of the anticipation. But then the quarterly reports came out, and therefore that news is more, I guess, impactful on the market as a whole than the Japan news. So then your anticipation switch to the sell at that point and anticipating a drop at that point.
That's 100% correct. But let's not hold on, y'all. Let's not act like the market didn't go up. This is
no. I'm just trying to figure out the
yes,
flow.
but I just want to clarify this. This is Friday. This is Thursday. This is Wednesday. This is Tuesday. This is Monday, right? This was last Friday. We anticipated this push up. We got it. Then the reports came out, guys. Then the market cooked off. So,
okay, that helps because I'm just trying to understand the chronological order.
I just want y'all to, the market is fluid. The market is going to react to fundamentals. The fundamentals are going to move this market. If the reports had been good, trust me, this sell-off wasn't going to happen. We would have pushed right up past here. Now, to just a novice trader, they look out and say, oh man, this is a double top and it's sold. Okay, that's true. It is a double top and it did sell. It even wicked past these highs.
Liquidity grab.
It grabbed liquidity before it sold. All that is true. But please do not walk away thinking that this liquidity grab and its selling was just a play on the charts. Because in real life, we got bad reports. The economy is slowing down. It grabbed liquidity, but yeah, it's going to cook off because there are real life and real world events that's going on that's pushing the market down.
Hey, Todd, let me ask you this, Todd. Hey, when you talk about these bad reports, are you talking about like the negative reports in the US, or are you going on one of them Forex sites?
Well, it's the US. It's the US economy. When the US economy slows down, the world is slowing down. We had the hottest economy. All right, like we already know that the British economy and German economy, they're under duress. We know that from the
pure shit then over there, the British and the Germans.
You said they what?
Pure shit.
Well, you got Richard breathing down your throat.
I'm just joking, people.
What you say?
You better watch your mouth.
Okay. Okay. Damn.
I like Germany.
I will get your visa revoked. Okay. You're not invited here. Chicken.
So, I just want to make I want to make sure that everybody understands like what happened. It wasn't bad juju. Like everything that I said was going to happen last week, it happened. Like it pushed up. I made money going up, but I didn't make the same type of money coming down. Coming down, I made a lot of money because I understood, what was going on and why it was happening and where to go to get the money. I understood which pair to go look at to get the money. As a matter of fact, GBP Chef probably did the same thing, but it actually didn't. It sold a few days before, but that was on a different. GBP Chef was selling because of Chef's interest rate rise, and it had to retrace. But I just wanted to make sure everybody understood, where you want to be or where you need to be as a trader. You need to be in a spot to where you understand why the currencies move or what moves the currencies. Everybody understands that the CAD is heavily influenced by oil, correct? Did everybody understand that? Does everybody know that? Drop a 2 if you understand the CAD, Canadian dollar, is heavily influenced by oil. So if you trade the CAD, you were interested in that OPEC meeting last week, right? What came out of the OPEC meeting? Basically, OPEC said, hey, we're going to do the same thing that we said we were going to do. They didn't agree to increase production. So there wouldn't have been any change in the CAD. It would just continue to get a little bit stronger as, if the economies were still running, it would just keep getting stronger because the demand for oil would still be there. But if the economy cooks off, then the demand for oil is going to drop. So you have to understand that the CAD is going to get weaker if the demand for oil gets weaker. That's in the back of your mind as you're trading. So you understand that JPY is getting stronger now because there's risk introduced. How much stronger is it going to get? Where can we anticipate the market going? Well, this is just the beginning. It just sold for 2 days, right? I think we discussed GJ being down probably about 500 pips at this point. We're in luck, guys. GJ is down 427 pips. Plenty of room to spare. At least another 700 pips. This is your money. You know what I'm saying? Like, I don't know how long it'll take to get down there, but if you notice, it takes a lot longer to go up than it does to go down. So, when you're looking for moves, anticipate these moves down there, right? I don't know when, I don't know what date, I don't know what session it's going to drop, but it's going to keep dropping because of the conditions in the market.
Sounds like the end of the world. Yeah.
It ain't the end of the world. It's the beginning of your bank account getting swole. So
No, sound like the drop comes like a thief in the night. You know, nobody knows the day or the hour.
that's why you watch, and that's what's funny. But it's not funny because I want everybody to be involved, catch these moves. But it seems like every time that I'm on one of those 5 o'clock calls, we have a conversation, and then the market does something weird, but I feel like the people on the call do exactly what we talked about on the call, and the market doesn't comply. It does something different, and maybe I'm the only one that makes the adjustment. I don't know, but you have to be fluid like the market is. Like if we anticipate a sell on EA, you have to wait until EA starts to sell. You can't just jump in there and sell it. You have to wait until it starts to sell. That's, I'm sorry, go ahead.
I was going to ask, looking at this, did you say which order block you got in? I know you didn't just hop in. So what time frame? Do you remember what time frame?
It was on the 15-minute, but okay. I already had the information that I needed. It was after an order block. The other ones, like when they retraced, I hopped in for the sell. So I'll probably hop in on this long candle. I mean, it was pretty fast that I made that money. It was fast. It wasn't, I mean, I wasn't playing, and the market wasn't playing either. It was a lot of money to be made on Thursday night.
So you hopped in without an order block if you got in on that counter.
Yeah. I mean, no, the order block was there. Like you can see the order block. This order block was definitely there. There's a difference, Terrence, in a cascading market and a regular trade that you take.
Terrence, he jumps in on that stuff all the time. He gives you guys rules because to protect you guys, but when it's just him by his lonesome, he does some different things.
Exactly. This is exactly what I was saying on Discord.
So listen.
Like you said, you was going in for a buy.
But he can do that. He can do that though. He knows what to watch for. I still need to train him with.
No, listen, y'all.
Terrence, if he was on the call, he was like, "Yeah, I'm going in for a buy. I'm going for a buy 50 points." And I was like, "Okay."
She's talking about.
I didn't trade currencies, so I was like.
As a matter of fact, Leandra, you could have doubled your account.
Yeah, and I could have blown it as well.
All right, so what I'm gonna do.
The time that happened is when the news came out for JPY, isn't it?
I don't know if news. I didn't see any news. I just saw the market drop.
Yeah, when I looked back.
Okay. Well, I'm about to give Leandra the floor here.
It was 12:30 a.m. my time, so I don't know what time that was your time, but that was when you said, when you made that joke about sleeping. Obviously, I would have been sleeping, so how would I have caught that trade?
Yeah, sometimes you gotta wake your butt up, man.
I told you I've got
to. I don't know what to tell you.
Anyway, we're not getting into this.
But listen, does anybody else have any questions on what I just covered? Okay, Leandra, I'm gonna give you the. Do you need me to stop sharing? Yeah, you need me to stop.
Todd, I have one question. It's a go back. When you were talking about the Japan bank intentionally making their currency weaker, why would they intentionally make their currency weaker by not raising the interest rate?
Okay, first of all, that's really my personal opinion. Well, it's not just my personal opinion. I think I've read somewhere else where somebody else believes that they're devaluing their currency. And we say that because they're not raising interest rates. That the why behind that, if you listen to the Japan Bank, they're saying that they don't want, like, the economy is not strong enough to raise the conditions aren't right to raise interest rates. That's what they're saying. It's kind of like in the US, we're raising interest rates even though we know it's going to cause a recession. We know it's going to cause a recession, but we're raising the interest rates. So in Japan, they're saying they don't want to cause a recession. They're going to leave the money policy loose. They're just going to print more money. And I mean, there are risks to both sides. China's doing the same thing that Japan is doing. So the risk to our side is we're going to cause a recession. The risk to their side is if there is a recession / depression, they don't have any tools to throw it in. They can't lower the interest rates. I guess they can lower it. They can make it more negative. But you understand what I'm saying?
You know, I think there's a big backstory, and you have to go research it, you know, yourself. I think in the 80s or 90s, George Soros did something to wreck, you know, their currency, if I'm not mistaken.
Who, the Japan?
Yeah, and they've never been able to recover, you know, from it. And I don't know all the ins and outs, but basically, like you said, they're negative and they don't have tools. If they have a recession or depression, they don't have tools to fight it. That's really why we're raising our rates, because if eventually we are going to have a recession, and if you're already sitting at zero or negative, how you don't have anything to fight it with. I mean, so anyway.
And that's why we're that's why everybody hates Soros.
Huh?
That's why everybody hates Soros.
Well, I mean, I think I think it's a little more complicated than that. You know, these folks over here don't care about the Japanese, you know, but you know, they're not liberal, they're conservative, so they don't like Soros. You know, he pays all the liberal protesters if you listen to them, you know. I know the man got a lot of money, but that's the most ridiculous shit I've ever heard of. But anyway, different conversation.
I thought that Japan and China keep their interest rates low is because manufacturing. So it's cheap for manufacturing, so they can export.
Well, that's some people will argue that too.
That's probably that's probably part of the reasoning, but it's not.
It's usually more complicated than that. It's usually multiple factors that contribute to the decisions that they make.
Yeah, that's why I said it. I think it's I've heard it's, you know, one of the reasons why they have low interest rates. Well, they keep them low. So
well, in China's case, they don't need to have a higher interest rate. They own all the U.S. debt, and our interest rate is so high that they're gonna get paid.
Right. I was gonna say that's the other thing. If you're in debt and your country's interest rates are high, that debt, you know, it gets harder to pay. And you know, there's interest attached to that debt. So you raise your rates too high, you can barely afford the interest rates payments, let alone the principal. So all of this kind of stuff goes into why countries debase their currency.
okay, can I start now?
Yeah, go ahead.
Okay. Hi everyone. Sorry I was a bit late earlier. So firstly, if you don't understand anything, just put 0 in the chat and I'll just go over it again, or just holler and I'll say it again. So firstly, I'd like to go over Forex Factory, the news, like Todd was saying. I've been following the news for a while because that's the main factor that moves US 30 is the fundamentals. So the start of the week was the 20th, it was a bank holiday for US. And I think Powell was speaking, I think 2 times this week, or 3, was it 2 times? Yeah, there was core retail sales. It was very important, and it wasn't. Sorry, let me just fill this out. Right, here we go. Yeah, Powell was testifying at 2:30. That 2:30 for me, this is London time. That is the opening bell. So 2:30 my time is when the opening bell happens for the indice pairs, and I think it's 9:30 Eastern Standard Time. So on the Wednesday the 22nd, Powell was testifying, and then on Thursday he was testifying again at 3 o'clock, and then he was testifying again on Friday. And then something that happened on Friday. I think it's just FOMC members I'll speak, but I don't think that was really that important. But it's I watched a video from ICT, and he said that when the Fed Chair Powell speaks, that's when S&P 500 likes to move. So S&P 500 is similar to US 30. So I was like, okay, then let's try this. And he was right. So if we go to the charts now, so we're on the daily. So first day I looked on, I did my analysis for the week, and then midweek. So the 20th is Monday, Tuesday, Wednesday, Thursday. So what I can see in the charts at the moment is that I've got scrap liquidity here. Sorry, actually start that again. I've got a fair value gap here. I think on my diagram, I thought it was from here, but I don't know. From here to here. So that's a fair value gap on the daily. So
That's a what?
A fair value gap. Do you know what a fair value gap is?
An imbalance.
Yeah.
Imbalance, gotcha. Okay.
So it's when there's a gap between 2 wicks and there's a candle, and then there's a gap in between. So this is a weekly fair value gap. See that I've done it from this wick here all the way down to here, because that's a weekly, so it's a bigger fair value gap, but this is a daily one. So can everyone see the screen?
Yes.
Yes, yes.
Yeah. So after all this imbalance here, with all these 1, 2, 3 black candles, this is when they had the interest rates raised. So this is what caused this big massive distribution of imbalance. So what price has got to do, it's got to grab some liquidity from up here, because we're expecting Powell to say bad news. We're just expecting it, because at the moment, he's already raised interest rates earlier at the start of June. So he's got no good news to say. So we're expecting him to say bad news. So what price has got to do at a technical analysis standpoint, it's got to grab liquidity from up here, where this pink box is, and then have all that energy, get all that Lucozade or whatever protein shake it needs to get ready for the run to go back down again. So what I saw is a fair value gap here. And then I also saw this lower low, lower high, and this higher low here, and then also this 6 hour bullish order block. I think that's most recent. And then I also saw that price did a similar thing over here. So it made this W, grab liquidity, consolidated for a bit, then dropped. So what I was thinking, and also what I got from ICT as well, is that price likes to run back up, like I said, get the protein shake, then run back down. So it needs to fill this fair value gap. It needs to be filled. And we've already got this lower low, lower high, and then this higher low. So that's indicating that price obviously is running back up. But is it going to run all the way up here? Probably not. Because this didn't for this run when interest rates were raised. So it probably won't go all the way up here because it didn't fill this fair value gap on the daily, which me and Todd were actually expecting it to fill when it was started to run up these buys here. It didn't fill it. So I did a fib. Please, anyone, don't kill me when I do this fib because I'm not a fibologist or whatever. This is just how I analyze the markets. So I did fib from the highest point to the lowest point. So I got the 50% mark was this black line, and then it was at the bottom of my weekly fair value gap. So that's an area I'm thinking price is going to consolidate in. That's the area that I'm expecting price to consolidate to get ready to push back down. So it probably won't run up all the way to get these highs up here. It's just gonna stay in this area, might wick up a bit more and then start shooting down. So I do this all before I do Will's strategy. So I do this from 2 o'clock to like 2:30 and analyze the markets. You guys can talk if you want to, if you've got anything to say, you know. If you've got any questions, please just like chime in. Also, what I did notice as well on the daily is that there was an order block.
I have a question. I'm sorry.
What's up? What's the question?
You mentioned earlier that lower low, would you put those red lines under there?
Yeah.
And you said, what was that? That was like breaking the low.
So you got your lower low here.
Mm-hmm. Isn't that swing low, right?
Yeah, swing low. I'm still learning the technical terms, but like I have it in my head.
But why did you, where your cursor is right now? No.
Mm-hmm.
Up, a little bit farther up.
Mm-hmm.
That one, no, the one above that.
Yeah.
Yeah. Why did you mark that?
Okay, this is what I'm going to explain now as well. So, it's a good question. Zoom in. So as Effie said, the swing low. So we've got lower low, lower high, and then higher low. I think that is. Correct me if I'm wrong, guys. So in here, between the 20th, the 21st, and the 22nd, there would have been an order block there. Wait, sorry, no, wrong. There was an order block here. There's an order block, sorry, that's a fair value gap. My bad, got my terminology wrong. There's a fair value gap here from wick to wick, but also do it from body to body, which I do. It's an order block there. So on the 22nd, it tapped into that order block, which is a bullish order block. So that's another indication is that price is going to run up. And if when we go down to the 1 hour, oh, and this dotted red line, let me go down to the weekly. This is the former high before COVID, before we got that big drop before COVID. So I was expecting price to actually touch this red line, but I guess we got as close as we could possibly get there. What, like a 50 pip gap probably? But yeah, so it's already tapped into this former high before COVID. So we've got our lower low, lower high, then higher low. And then so the order block and price push drop. So in 6 hours. Order block right here. On the 12-hour, there's order block, which got filled. If we go back to the daily, that's an order block. Sorry, a fair value gap that got filled. That's an order block that it price tapped into because it filled this, it had to fill the fair value gap that was formed on the 12-hour. So this purple box is the fair value gap. So that got filled. So it's tapped into a daily or to a bullish order block, filled a fair value gap, price. The only way it can go is up now for me. I'm just going to mark up my days. And so that's Friday, it's going into Sunday. So on the 1 hour, I've just marked up the day, which is the 24th, so I'm not passing it. Play this out until it gets into Friday. Right. So that time is 6:45. Let me mark up. Sorry. Oh yeah, my times are in Eastern Standard Time, New York. So this is New York time. On my trading view. So I just marked up 9 a.m. I'm just gonna let run to the. So go back to the 1 hour. Right. See that price. Has got liquidity up here. Liquidity up here. I didn't expect price to run up and grab all this liquidity that soon. I didn't expect it whatsoever. I was expecting it to go down again and then come back up for that run, but it didn't do that. And plus, I saw fair value gap here, another one there as well. Before 9:30. So my analysis was that price going to run through these fair value gaps, grab liquidity, and then run up into this big fair value gap. But as you can see, before 9 o'clock, price is already heading up. So put a pivot on, see what price is doing overall. Yeah, sure, Effie, that's fine. Have you already left? Have you already left? She's already left. But yeah, she wants to know how I can combine the two strategies together. But this is all, everything I do here is what I do between 2 o'clock and 2:30. I'll just, quickly look at the charts, look at the news. These are all fundamental things that I do before, while I'm, marking up 4-wheel strategy, is that I'll look at the news, see what's happening in the news, see what's going to affect the news for US 30. Sorry, see what's going to affect the US 30 pair from the news. And then I'll look at the charts, see what's happening. Is there an order block? Is there liquidity that needs to be grabbed? Is there fair value gaps that needs to be filled? A possibility that they might be filled, because sometimes they don't get filled, and it goes in. Price will go into a different direction to fill a fair value gap that I wasn't expecting. But that's
so you're not. Let me ask you. You're not using his time price and kill zones within that as well, because that helps a lot with not only direction for where the market is going, meaning at what time. Generally, if London's down, New York is going to be up because it's got to liquidate London with the London move that it just did. Unless it's a strong move, then at certain times it won't go back. For instance, what I've noticed starting to implement his time price in there is that 3 o'clock when London opens, 3 o'clock Eastern Standard Time when London opens,
Yeah.
it'll go back a lot of times to the midnight price, grab liquidity from the midnight price, which is the opening price for the day, and do its thing from there. And then 8 o'clock, 7, 8, or 9 will also go back to 2 o'clock and then take off from there as well. On US 30 pairs as well, USD based pairs and NAS. So you're not incorporating any of that into what you do.
Yeah, that's exactly it. That who's this speaking? Is it Des?
Yeah, it's me.
Yeah, Des, that's exactly it, hon. Like, basically, I'm going to go on to that now as well. So see all these fair value gaps that are marked up. I'm thinking that price, because this is on the New York, this is New York Standard Time. All of this, but this is not English time. This is, all my charts are New York Standard Time. So I've marked it up. So this is the opening of New York, 12 o'clock, 9 o'clock, and 5:45 on the 26th, because it goes over to Sunday. So I've marked up prior to 9 o'clock, 9 o'clock. I've marked up, okay, there's a fair value gap here, there's a fair value gap here. I'm expecting price should have ran through this already in, the London session, which would have been, like you said, 3 o'clock till, so I've got sessions in chart on here, So yeah, so the yellow is London. So I'm expecting price should have ran through these fair value backs already, but it didn't. It was already going up. So I was like, okay.
Well,
so
go ahead. I'll let you finish. I'm
so
sorry.
when it came to 9:30, and I was expecting it to go down, to grab this liquidity, to go back up. It didn't do that. I don't know why, because it was already in a premium market.
Yeah. The other thing, how he breaks this part, I really get the video that you were sharing the other day. I couldn't grasp what he was saying based on how he breaks the market down Monday through Friday, meaning the hours. So on the hour chart, what did he say? So let's say Monday is a bullish day, right? Monday and Tuesday is bullish.
Yeah.
Generally, that means Wednesday will consolidate, Thursday, Friday will be bearish. Of course, unless there's some change of character, and that generally happens on Wednesday. Then if Monday, Tuesday is bullish and there's a change of character on Wednesday, that means Thursday, Friday will be bullish as well. And that did happen on Wednesday. So therefore, I still do, what's going on during the London and New York and stuff. But that also told me that it's not going to go back lower to pick up any liquidity. It's going to go higher overall. Of course, it did go down yesterday, then went up, but I didn't expect it to go all the way back down to where you have it in the blue at, because there was a change of character on Wednesday. Because how he breaks down on Market Maker Series video 4, how he breaks down the market through the week.
Yeah.
I use a lot, has helped me with a lot, actually with pairs more so. But it also helps with US 30 and NAS as far as breaking down like that. And then noticing how the time fits into there, specifically what I call, he calls them kill zone times, but there's specific key times that the market goes back to certain areas. But if it does, for instance, if London doesn't go back down there at that time, then more than likely New York is not going to go back there either, because New York likes to cover or take care of New York's business. Meaning, what did he say? Asia sets up London and London sets up New York.
Yeah, so basically, so London creates like a fair value gap.
Yeah.
Or, order block, so you can easily see the setup.
Yeah.
Or prior to, it's normally, is it like he said 8 o'clock to 11:30, 12 o'clock. He doesn't like trading at the lunchtime.
Yeah.
So I'm gonna show you that as well, partly that, but I get exactly what you mean. But that's something I need to work on as well in terms of I'm literally going over that episode 4 at the moment as well. But like he said about Wednesday consolidation, and then
Yeah.
you get your runs on Thursday, and then
Now
maybe
sometimes
Friday.
they'll fool you and not consolidate, but oh God.
Yeah, that's
Then,
why
like, yeah.
you got to take everything he says with a grain of salt and just back test yourself. You know, it's all about testing, isn't it?
Yeah.
But this is just basically everything you said is what I'm gonna do, or I've already like kind of shown about, you know, the critical grabs, the time zones of which to find the setups and everything. We'll go through this now. So you can see it here.
Yeah.
There's a bullish order block. Price is tapped in. I'm still thinking that why you need to grab, why isn't it grab liquidity here? You know, from the fair value gap. But there's an order block right there. You know, this on the 1 hour, this order block right there.
And what time is that candle you said it didn't grab liquidity from?
That is 3.
The one you said it didn't go back. No, the other one.
This one?
No, the one below it, the other one. We have, what time is that?
That one is 9 o'clock on the 23rd of June.
Not AM, right?
No, that's the PM.
8 session? That's 9 p.m.
Yeah, it's 9 p.m.
Okay.
This is on New York time, so this is Eastern time.
New York generally doesn't go back to Asia. Just
Okay.
Yeah. If London didn't go back to Asia, New York's not going back to Asia.
Okay. So if London doesn't go back to Asia, New York doesn't go back to Asia.
Yeah. Generally. Okay, there's those times to look at that. Generally. And I say that because, you know, there's for every rule, there's something that's going to break it. So generally, if London doesn't go back to Asia to do anything, then 9 times out of 10, don't expect New York to go back there.
Because I've gone down to 15-minute time frame now.
Mhm.
And that's when I start to mark up. So this is.
And this is not based on technical analysis or fundamentals. It's just based on kind of observing what's going on in the market and how the algorithms more so move the market than technical or fundamentals.
Yes and a no, because like I said before, I look at the news.
Mm-hmm.
I look at the news. I've been.
Oh, no. That part I was saying about how it's not going back to certain areas at certain times. That's more so the algorithm driven than the fundamental or the technical analysis part.
Yeah, I would say it's a bit technical though, wouldn't you say?
Oh, well, I mean, yeah.
It's the algorithm myself.
Yeah, because its algorithm is I don't know. Look, it is what it is.
It never goes back to Asia. I mean, unless it's a strong trending market, New York never goes back to Asia. It might revisit the highs or lows of London, but it doesn't go back to Asia.
Well, like I said, generally,
right.
There's always that
exception. It doesn't. There's an exception to every rule. Got it.
Yeah.
But, I get what you're saying.
And I think, honestly, that's the part I'm saying is more algorithm driven than technical or fundamental stuff.
Right.
That's a good point there, guys. Very good point. I'll take note of that as well. So if we've gone down to the 15-minute, there's been a fair value gap that's been filled. Like I said, it's tapped into that order block. And you've got another fair value gap that's been filled here, all prior to prior to 9 o'clock. So normally on the 1 hour, I do a fib. I think I did a fib on here. And I was like, that's the end point. Because normally I do a fib from the high to the low of the high of the day thus far.
Mm-hmm.
The previous low of the day.
Mm-hmm.
Please guys, don't kill me. Like Todd's always already told me I did the fib wrong.
Well, he can't hear my fib, so go ahead.
Yeah, that's probably wrong. I think. I don't know. I think it was wrong. I'm not sure. Might be wrong.
What time frame are you
Bottom.
when you fib this?
Hmm?
What time frame are you looking at when you fib this?
1 hour.
Right, but what time of the day?
Oh, so like at 9 o'clock, 9 a.m. So prior to, it's between 9 a.m. and 9:30. So between just before the market opens, I kind of like look at the markets and assess and do like a quick analysis of see, okay, cool, what's current price saying? You know, like I said, look on the higher time frames, go down to the lower time frames, because that's where I'm going to be trading, on the lower time frames. And I'm going to be catching, you know, a couple of pips. I really don't need like big big moves. But if I see that price is going into a massive fair value gap like this, then it's a winner, you know? Who's complaining?
Yeah, I do something similar. That's why I was asking. That's why I don't screw around with the pairs, because to me they're a waste of time.
Todd will kill me, but
I used to think that too, but they give, if you hit it right, and if you put, honestly, what helped me with pairs was more so putting ICT's, how he breaks down the market on Market Maker Series video 4. How he breaks that down just on USD pairs. I haven't gotten into the other pairs simply because he said it generally works on those pairs a lot. It really does play out a lot of times the way he describes there, and it does work. And you can get some really good pips. I passed both phases of the challenges just with pairs. So yay for the pairs.
Yeah,
You can get some good pips.
Yeah, listen. Let's stop lying about pairs not paying, because that's an absolute trash can lie.
I'm not lying about it. I can only give you my truth. If everybody else is getting paid, hey, great. I'm happy for you. I said I don't fuck with pairs.
Well, we're not actually asking you to get physical with them. Just, you know, take the money that it's giving you.
Des, you're gonna have to do the next Saturday on pairs.
Because no, I'm not a pair person. I'm more US 30 and Nas, but I understand them now that I've watched that video and can break it down like that. Barbara, I don't know if she's on here, but she's really good with it too. And just really understanding how he breaks it down. And then of course, well, not necessarily use the fib, it's just how the order block, and when it gets to a certain area, and the time does play out as well on the pairs as well, from what I've seen, and when I, you know, remember to actually go back and revisit it, the time does play out as well. Like I noticed that 8 o'clock definitely will go back to London's time to pick up liquidity, and then we're on its merry way, up or down. But you know, yeah, at any time between 7 and 9, it'll go back there, pick up liquidity, and go. So it does work. You just have to apply it, and then make sure you set your alarm so you can actually play what you chart.
Okay, girl, you're on the next Saturday
No,
call.
no.
You know your stuff. Come on now.
No.
And also, if I go back to this 1 hour prior to 9:30, got a doji here, and then this bearish candle, and then price underneath here, and you know, liquidity, sorry, underneath here and underneath here as well. So I was kind of like, oh, it's gonna run down and then run up. Little did I know. Oops. So I've gone down to the 5 minute now. Now I'm on the 1 minute. go back down to the 5 minute and then take it into the time frame between 9 and 9:20. See what price does. You put a 1 in the chat if you get in before. If you get in before the opening bell. Des. You're brave.
Clarify that if you get in before the right time, like if I get my butt up at 3 or 4 o'clock, then yeah, I can get in pre-market open.
What, like London sessions?
Yeah. Like, let me clarify, if I get my butt up, sometimes I don't, I just have to wait because I know the market's going to go back, you know, to London and pick it up. So, because what did he say? And this pans out. I don't care what you're doing. I don't care if you're doing indices. I don't care if you're doing pairs, kill zones. If you get in at a kill zone time at a fair value gap of a 2 minute or a 3 minute, you're golden.
Yeah, exactly. That is what I've been trying to master, those kill zones. So it's on 9:29 now. This is on the 1 minute chart. So I'm just going to go down to the 5 minute to see what we can see. So price has just run up. It's just run up. Probably got a little fair value gap here, but price is just running. Literally. So my eyes, there's liquidity above here. So it could, I was thinking it's gonna grab liquidity up here and then shoot back down and probably, like Des says, the kill zone. After, you know, the opening bell, it's gonna run back up into this fair value gap. So on the 1 minute. So when I'm doing real strategy, I split my screen. Does anyone else trade? Can you put a 1 in the chat if you trade with your phone and you trade with TradingView at the same time? No. Anyone know if you can replay back on the double screen? Maybe you can't. I have to go back, sorry. Here we are. So I have the 1 minute on this side. Sorry, 1 minute on this side, the 5 minute on this side, 1 minute on the left, 5 minute on the right. So I've marked up my midnight opening price as well. I'm just going to let it play out on the 1 minute. Sometimes I wish it was in seconds because sometimes the 1 minute is just so slow. Hold on. So on this 1 minute, prior to three 9:30, there's a fair value gap right here. It got filled. Price made a lower, higher low, lower low, and then it had this displacement of this bullish candle. That is showing me it's going to go up because it's filled the fair value gap. It's tapped down, and it's got a momentum to keep on going. And then it's filled any gaps that are in this candle. Then it's tapped, I think, on the 5 minute. Yeah, on the 5 minute, it formed an order block. So it's got this bullish order block, tapped in. I got in the bottom of this candle. Between here, I got in. And then I ran it up to, I think, the 50% mark. So I did a gang box on the fair value gap. I'm up on the 5 minute chart. That's 140. One second. What I did for them. So 1 minute. Oh, I got in twice. Sorry, my bad. I got in twice. I got in for wheel strategy, and then when I find that wheel strategy always creates opportunities for a bit bigger move or a better move. So fill this fair value gap here. But then it's running down. So I'm thinking, oh, it's going to go down, fill this, all this liquidity that I've marked up down here. Didn't do that. Tapped into this order block, this bullish order block, tapped in. Okay, is it going to fill this fair value gap here on this bearish candle? And I find at 3 o'clock my time, I think it's 10 o'clock USA time, that is when price has a lot of displacement. That's it. Yep. There we go. So price filled this fair value gap, and then now it's filled this fair value up with this lower candle here. This little fair value gap here. It filled it, tapped in. But when you're on the 1 minute, you're gonna get this back and forth movement from price and from the candles. So that's why I also look at the 5 minute. So it makes me less anxious when I'm in the charts. Because sometimes I'm like, oh, have I made the right decision? And then I look at the 5 minute, I'm like, yeah, I have. I definitely have. So there you go. Move right there. Give you all the opportunities, you know. Fair value gap here, order block here, getting down here, or you can wait till price fills. It's tapped into this fair value gap. Once it's tapped in, I'm thinking it's gonna ride it all the way up because it's in a premium market from the opening bell. So from the opening price at midnight, NYC, New York Standard Time. Eastern Standard Time. It's already in the premium market from then. So I'm thinking it's not. It's got too much momentum to be pushing down for a bearish trend. So it's definitely going to push through this fair value gap here. So let's see how I link this in with okay, so this is how I link it in with Will's strategy. So this is what I did. So the blue lines, that is the fair value gap. And then I got in the 2 red lines. That is, can you see the screen, by the way?
Yeah, I can see the screen, but I don't know, I can't designate the color.
Yeah, I'm just explaining it. I'm gonna explain it now. So the red lines, that is where I did the fib. I probably did it wrong, but that is where I did the fib, and for from the low of the day, from the previous low or previous high to the current low and current high of the day, because there wasn't a large gap between the high and the low before 9 o'clock. So I just did the previous low to the current high on the 24th. So it came up with these red lines. That was like the 50% area. So I was thinking, oh, it's going to consolidate in this area, which it kind of did. And then my black lines are my entry lines. So that's where I've got in between those lines. That's where I place all my trades. And when I mean place all my trades, I didn't just place one at 30986. It's because I'm still using Will's strategy in terms of placing multiple trades and, you know, riding the wave. I really need to change that, but, you know, bad habits at the moment. So this is a daily. This is what I look like on the daily.
Okay, I like that.
Yeah, well, this one, I think this is more clear. This is the 15-minute. So I got in, so the blue lines, that is the fair value gap. So that the blue line at the bottom, that is where my possible that is the fair can't speak. That is the fair value gap on, you know, the higher time frame. That is the area. The red line, that's where I did the fib. And then that's what I'm thinking it's going to consolidate. But it didn't, it ran straight through. So I was watching it in that area. My pink line, that was a point for take profit. So if it, on Will's strategy, I do mark up like my take profits in pink. So if price runs up to this, like past like a certain point on Will's, then I'm thinking, okay, cool, it's going to go to my pink mark. Normally it's either It's something I've like a pivot or a fib mark that I've marked up, or a point where there's a fair value gap or order block, and I marked up with a pink line because I've seen it in TradingView, and I've marked up on my TradingView chart, and then sometimes I put it on my MT5 chart. But yeah, that was a point of take profit. But the black lines, that is where I entered and I saw the setup prior, and I thought, okay, cool, this is going to carry on going up. So I've got 1 hour marked up fib areas, black line profit target, the blue dotted line is a 50% area, and the black line with the NYC price at midnight, price was above 9 a.m. Eastern Standard Time, which indicates USA is in a premium market. Also, it starts to enter the fair value gap. So here it is. So that's with the fib marked up on it. That's obviously how I did it. I did it correctly there. Oh, I must have marked the fib. I must have marked the fib just on that day. I probably didn't do it for the previous day. I marked the fib on that day. Sorry, I got that wrong. So I didn't go for the previous day. I marked it up on that day. I'm still learning how to use the fibs. Please don't kill me, guys. Please.
You're okay.
Do not kill me.
No, you're okay.
Yeah, that's also what I did as well. The previous highs, that was an area, the red lines were previous highs. So, okay, is price going to hit this previous high and then revert back and fill all the fair value gaps that it's got below and get all this liquidity? Or is it going to keep on running through this fair value gap? So I had that marked up just as a caution as well. Just for my own analysis, I think that the more you can mark up and just be cautious of what price is going to do, especially on US 30, you just never know. I just mark up like everything. I'm still learning, guys. Please, if you have any questions, please speak up. Yeah, so the fair value gap and the imbalance is marked up as a blue line. So as you can see, price run through that. That's on the daily. I think
So you got I semi understand all your lines. I mean, what are Will's lines? Is that just support and resistance, retail support and resistance on his? Because I see all them lines, and I guess you guys, you know, when price passes a line, you probably jump in trades, and when it gets to another one, you get out. I'm not sure what y'all are doing when y'all do it. So what are all them lines on on his chart?
Okay, so all those lines on TradingView, they're my personal analysis of what I do on US 30 prior to the market open, and you know, between 9 and 9:30 to mark up, see where price is going to go when the market opens. And then there's a time period, like Des was saying, there's a time period of
the kill zone. So Leandra, yeah, I understand pretty much what your lines, why you put your lines there, because they represent their value gaps and previous days highs and lows, and London highs and lows and all that kind of stuff. I get why you have your lines.
Yeah.
You trade with Will, right?
Yeah, this is what I'm getting to.
Oh, okay. Good.
Yeah. Right. So in that kill zone area, Des, is it kill zone 8 till?
New York zone is 7 to 10.
7 to 10.
Mm-hmm.
So let's mark this up. screen. So in this kill zone area, let me go down to the 1 minute. I've got a kill zone entry, you know, because I've done the analysis prior, and then in that time, the 9 till 9:30, I'm marking up Will's strategy as well on MT4. That's not on TradingView. So this is Will's strategy here. So Will goes from the 4 hour down to the 1 minute. So he goes 4 hour, 1 minute, 5 minute, 15 minute, 30 minute, and then 1 hour to mark up all his lines. So on that day, this was my 4 hour markup. So I've already looked at so I mark up this at 9 o'clock. Yeah, 9 o'clock, I'm gonna say 9 o'clock Eastern Standard Time. I mark this up, and then after I've put my 4 hour lines in, I can blatantly see there's a fair value gap here, but it's also reaching these relatively equal highs as well. But it's in it's also reaching these relatively equal highs as well. So so then I go onto my TradingView chart, mark up and see where there's fair value gaps, where there's order blocks, and then I go back into my MT5, sorry. And then this time I took screenshots of every single day, every single hour, because normally I do that. But obviously this time I don't think I did. I only took one of the 1 hour on that day. So I don't know if you can I don't know if you'll be able to understand this, but so basically the white lines are my consolidation areas. They're marked up on the 1 minute. The blue line, that is my 5 minute lines. They're marked up on my 5 minutes. And then the green line is marked up on my 15 minute, and then the purple line is marked up on the 30 minute. And then these horrible like brown lines, they're marked up on the 1 hour. So this is a 1 hour chart. So you can see that, oh yeah, I'm sorry, yeah, the red lines are the take profit lines. So this is a 1 hour chart. So you can see that 15:55. Previous day, and that's the 23rd. I got that wrong. Hold on. I thought I looked wrong, actually, but you can still see it. You can still see it here. This is where this line, these 3 white lines, you can see that consolidation area. No, because it's on a different day. It's probably wrong. This one is. Let me look back, see if I've taken a better screenshot. This is, I think I've only got these screenshots. This is the 1 hour, the 23rd. Oh, yeah, the 24th. But okay, so this kind of makes I can kind of explain it from this one. So the white lines are the consolidation lines marked up on the 1 minute. The blue line represents the 5 minute, and that brown line is the 1 hour. So the 1 hour line, if price pushes past that, I'm normally getting in, because that line normally equals that, okay, cool, like it's a very strong area of resistance for price. If it rejects and it pushes the opposite direction, okay, cool, it's going down. But if it pushes past that line, then I'm definitely going in for a sell. I mean, for a buy, sorry. So it did that with Will's strategy. I think I've got a better. So this is on that was on the minute. Okay, here we are. This is the 1 minute. screenshot. So yeah, this makes more sense. So I got in. Can you see that dirty kind of, sorry, 30953. This
The
brown
area.
line here, yeah, this brown line here, that equals the 1 hour. So price had an engulfing candle right over that gold line. So, and plus is it the alligator or the ADX was you know, obviously just shooting up. So my indication was, okay, cool, get all my entries in for a buy. But this orange line here was marked up on the 4 hour. So that is a heavy indication that, okay, cool, if price doesn't run past this, then it's going to revert back. And plus, since it's done this massive engulfing candle and it hasn't retraced back, that's a fair value gap. Just like I showed you on TradingView, that's a fair value. That's the fair value gap that needs to be filled. So price is going to have to run back down, seize this order block, and then run back up. Back to, so you can see it on, I don't like these arrows, man. They're so annoying. I don't know if that happens to anyone
That's
else.
on 5. Yeah, I don't like, that's the only thing I don't like about 5. Is like stupid
Yeah.
arrows.
You can get rid of them.
I prefer the arrows were smaller.
You can get rid of them?
Yeah, you can get rid of them. Go to settings.
Girl, you're gonna have to show us after I'm nearly done, so you can show us after, girl.
Oh, I can't show you, but I could. Yeah, go ahead.
Walk us through, that'll be fine.
Yeah, please, thank you. Who was that talking?
Is that Pips and Dip?
Kenya.
Oh.
No, it's Kenya.
Okay.
Thanks, girl. Yeah, so so that's what I like about Will's strategy, is that the lines that you mark up are really true to, you know, the markets and what it does. What I've found that anyway, that when price does hit a certain marker, like a 4 hour, it's either gonna push past or revert back. Or when it hits, you know, in consolidation, it consolidates. So for me, it works. Like I said about the 1 hour brown line, if it pushed past that with a, you know, displacement candle or engulfing candle that's giving momentum, then it's most likely it's gonna follow through and go continue in that direction for a couple of pips. As you can see, I got in at the blue arrows, got out at the red, and then I got in again at these blue arrows, got out the red. So I got a bit scared. And then I think I waited for 10 o'clock Eastern Standard Time. And that's when I got in for all of these buys, because I saw price was just going to run up, because I already marked up on my TradingView chart the fair value gap, the order block, everything prior. So I know, okay, cool, these two black lines are my entry. This is my entry area. Even though I wouldn't have liked to have entered all the way up here, but you know, Kuna Matata, what can you do? Price still ran up, went in my favor. I was panicking a bit when this was consolidating. I was like, I had a feeling, because it was already in the fair value gap. So even if it did go down, it's still going to run back up because it was already in this fair value gap, and it was already in a premium for the day. So that was the 1 minute.
So why were you confident it was going to stay in a premium for the day versus trade back to a discount?
Because it already had so much momentum. It was just running. Like, even when we went on Will's call, price was running up. Like, it was just wanted to push up. It just kept on rejecting them, pushing up, rejecting them, pushing up. It was just going, it was just heading in that direction. Mm-hmm. So you can see I got in in this area here, and then got out at 31252. No, it's got out up here.
I ain't gonna lie, when it started consolidating in the premium, I probably would have jumped ship, because I probably would have thought it was gonna sell back down to the discount.
Well, it was in the fair value gap, so and plus, it only took a few minutes. This is on the 1 minute chart, so it only took a few minutes, and I knew it was consolidating prior to 10 o'clock Eastern Standard Time, and then what was it there? Yeah, it will. Then it ran up. Yeah, 10 o'clock. I find that on the hour, US 30 normally moves in a very good direction, like either bullish or bearish after the whole, fiasco of the opening bell. Come 10 o'clock, 3 o'clock GMT time, it's gonna move. It's gonna do something. It's gonna give you some money, and it's gonna set you up as well. I'd get what you mean about because I was scared. I was scared when it was consolidating prior to 10 o'clock, because I was thinking, it could go down. It could just, shoot back down, fill this fair value gap, and then run back up. But thank God it didn't.
I know that's right.
That one's the 1 minute. This is the 15 minute. So I also look on the 15 minute as well. Don't know if you trade Will strategy, Will also teaches us to trade on MT5 or MT4. So obviously when you make a trade and then you can just close out quickly, or you can also see a graph here. So I have the 15 minute here with my entries, and then on the other side I have my 1 minute and my 5 minute as well. So I'm looking at US 30 from 3 different angles.
Yeah, y'all tech savvy beyond my.
Oh, sorry, it's not up. Sorry, it wasn't sharing. Can you see it now?
Yeah.
Yeah, so I have 3 different screens showing US 30 in the direction, or I'll have US 30 on the 1 minute on the left-hand side. Then I'll have SPX 500 on another screen, just to, I might place a trade on there as well because it moves in the same way. But most likely I just revert back to US 30 because it's known and it's loved, and it just stays consistent with giving me everything I need. Don't need to go out looking for more when you're already satisfied.
And you have all these screens on your phone?
No, this is on my laptop. So I have my work laptop next to me, and then I'll be on my Mac, and then I have my phone as well. So my phone will be on the 1 minute as well.
Okay.
And then my phone will have all the MT5 markups, or MT4, whichever platform you want to use, from Will Strategy. So from 9 o'clock, from 9 o'clock to 9:30, I've marked up Will strategy. I've done all of this. Oh, so sad I didn't take it from there. I've done all of these markups, and then that's staying on my chart, because one thing I found is that US 30 will likely hit one of these red profit targets. It might not be at the opening bell, but it might be later in the day. So I like to keep them there until the next day when I'll delete all the lines. So I think the lines really do help. Does that answer your question? Is it Rashawn?
Yeah, it answers my question. I thought they probably meant something. I just didn't know what they meant.
They do mean something. They do mean something. Like, yeah, when Will does it, he marks up like. Oh, I don't know if I can explain this. 1 second. Go on to this stuff. Let's try this. So when Will does it, you have to zoom out, and then zoom in, like one or two taps, and then you mark up on these trade levels. See these like lightly dotted lines? See these like, oh, you can zoom in. So see these lightly dotted lines? These are classed as trade levels. Well, this is what Will calls them. I don't know if they're called trade levels. Don't kill the messenger, please. I'm just passing it forward. So these are called trade levels. And then we mark up the lines on the trade levels closest to the consolidation. So we'll mark up the consolidation on trade levels. And then after that, all these lines, like the blue line, will be marked up on the trade levels on the 5 minute. And then if you see any, if anybody trades Will strategy, help me out here. If you see any
white space,
not white space, these lines, what are they called again? ADX, not ADX.
Yeah, moving averages.
Yes,
the moving averages and this ADX lines.
Yeah, I don't do the ADX, but other people do, because I find I don't want too much stuff on my screen. But these moving averages mark up the red and the green lines. Well, mine and the red and the green lines on each time frame. So I think apart from the 1 minute, so on the 5 minute, you'll zoom out, zoom in, one tap or two, find the trade levels, these dotted lines, mark up the blue, and then you'll see where these moving averages are on the screen. If they're in the consolidation, you don't have to place another blue line on them. If they are not, then you mark them up. And I find that when I do that, either the trade levels, the trade levels that I've marked up on my MT5 or MT4, they do respect. I find that Will strategy is basically putting a fib on US 30. That's what I've found it to be anyway. When I've marked up the fib prior to 9:30 Eastern Standard Time, I find that it's technically the same as a fib, the fib markup. I don't know if that's the same for everyone else. Correct me if I'm wrong. Thank you, Kenya.
I never noticed it. I never took the time to notice it because I can't put a fib on the stupid app. So I just never noticed it though.
No, not on the MT5 app. When I've gone into TradingView and I've done my markups prior, and currently I've been putting fibs and I've been marking up my fibs, and I found that, oh snap, they're the same.
Oh, okay.
These fib levels are respecting the same, some of the levels that on Will strategy. So yeah, I don't know, because obviously he got his strategy from someone else, doesn't he?
Yeah.
So I don't know this guy who, you know, created this strategy, where he got the ideas from, but it respects. I would say it's good to do. What pairs do you trade? Rashad? Is it Rashad?
Yeah, I trade the US 30 primarily, sometimes the NASDAQ. I don't generally trade pairs. They move too slow for my taste most of the time anyway. So mainly the US 30. I do it blind though, because I work all day.
What do you mean by blind?
So, I mean, I do something similar to what you guys do when y'all look at London, and, you know, I note the highs and lows, and, you know, usually I'll put like if I can find a swing high and swing low somewhere between my time, 5 and 7, which is probably 7 and 9 New York. I will put a fib on it, and I'll just put me like a buy or a sell, depending on what direction it is, at the 78% mark. And I'll put a stop, you know, I don't know, 100, 150 points down. And most of the time it picks me up, and, you know, I can usually get out, you know, depending on the lot size, you know, $200, $400 in profit, you know. So I can't look at the charts because I don't have internet at work, you know, so I can't usually ride stuff all the way out, because there have been times when I've left it in, and, you know, I'll look at work and I'll be up like, say, $300, and then I'll let it ride, and next time I look at it, the trade's gone, and I'm like down, you know, I lost $100 because it went all the way back down, it retraced all the way back down. So most of the time it does pick me up. It does put me in profit. So I just usually will close it. If I see myself up $200, $300, $400, I close it. And like there was one day last week, maybe it was the week before, I was pissed because I closed a trade at 200 and the market had either dropped or went up. I don't remember. I talked to my brother about it. It was an 800-point move. I got like $200 out of the move because I closed out. So every time I close out early, I leave a shit ton of money on the table. Every time I let it ride, you know, I usually will lose because it retraces on me.
So how do you trade if you've got no internet at work? Can you only trade on your phone?
Yeah, but I don't have internet. My phone won't get a signal. I mean, we got internet on the government computers, but, you know, I don't even play around on it.
Government, ooh.
Yeah, so
how do you trade then?
Huh?
How do you trade?
Well, like I said, I fib the moves, and, you know, I buy at a discount or sell at a discount, you know, so I'll fib the moves, and I usually will place my buy or sell at the 78%. Like if you look
when do you do this? In the morning prior before you get to work?
Yeah.
Okay.
Yeah.
Okay.
So like if you look on the left side of your screen where you have that fair value gap marked up, I guess.
You call it imbalance, whichever one.
Yeah, the imbalance. There you go. Or it looks like the order block. See where price went up and then it came back and tapped back in?
Yeah.
If you put a fib on that, that's probably, it looks like to me like it's at 78%. And I know that move is like at the opening bell and then it comes back, but basically I will find something like that before the market opens. I'll fib it before it drops back down, and I'll just put the sell at the 78%. And like I said, most of the time it'll come back and pick me up, and it'll take me into profit. And like on this day where things kept going up, maybe I would get out at that, you know, when it kind of at the relative equal highs. I'll look at my phone, I'll see myself up $200, $300, $400. I'll get out. And then at the end of the day, you know, see how far it ran up. That's probably the day that I left all that money on the table. But that's generally how I do it. But I got to protect myself with the stops because, you know, I can't watch the charts.
Yeah, I understand totally. It's hard.
And every now and then, you know, you get stopped out. and then it does what you thought it was going to do, just maybe the retracements were deeper. So, I got to pay attention to the where the sell stops and buy stops are, where the liquidity is basically, because sometimes you place those orders, and if it's too close to relative equal highs or lows, it's going to run past you and go get that liquidity.
Yeah.
So
only for a short time sometimes.
Yeah. So that's how I do it. I mean, it works. I mean, I think if I could watch it more, I probably would be a little more successful, but it works. I make a little bit of money, but
That's
I got
really good though. That's really good.
Yeah.
So do you trade after work as well?
Generally, I don't, because Asia doesn't really move. I mean, and if it does, it's really tight. And I haven't been able to crack the code. And by the time London starts, I'm usually asleep, too tired. If I stay up and try to trade London, then I'm not going to go to work that next day.
Asia, from what I see, it's nothing ICT said, but from what I see, 8 o'clock generally starts the move on Asia.
Mhm.
And that's about all I know, because I haven't really played it myself, but I'm kind of looking at it because I have a friend that usually gets about 100, 150 pips on it.
Really?
And
Out of Asia? I mean,
yeah, out of Asia session.
On USD he does.
No, he does Nas,
Okay.
but Nas and US 30 have been moving the exact same the last couple of weeks. So,
they're pretty correlated.
yeah.
I can't get a feel for Asia. Yeah, I mean, I just feel like it's a black box. I mean, who knows what it's gonna do? So I'd be interested to talk to somebody that successfully gets profit out of Asia, because I don't see how anybody does.
Yeah, he does. I don't know how myself. I mean, the last couple of times I've seen it, it does seem to, be moving, but it consolidates a lot too. And I don't know whether he starts to move at kind of like at New York. No, he doesn't start at New York close. He may start at 7 and ride it till like 9 or 10. But he says, per him, because I don't know, he says he starts it at, and I'm like, well, I don't see how you're doing that. But he's only going for 100 pips, so I don't think he's riding it out the whole time.
I mean, 100 pips is great out of Asia, in my opinion.
Yeah, but I mean, the market retraces. If it's a big move in the day, it's going to retrace on Asia.
So this is who's that? Is that Todd? This is Asia that week.
That's on a 5-minute. What about on a let me see the hour on Asia.
The hour.
It's a 4 hour.
And even if you got good movement out of Asia that 1 week, I mean, I'm talking about more than 1 week. Asia doesn't consistently be big move.
Yeah, but look, there's Asia there, this blue section, Asia.
Asia.
Favorite.
I mean,
they've got a few.
It's easier to see.
Sorry, Des. Here you go.
You're fine.
This is Asia, the blue section.
Yeah. Okay.
Well, maybe I need to pay closer attention to Asia. So, what you're basically saying is, if we have a big up day, Asia is going to retrace. If we have a big down day, Asia is going to retrace. Is that the general?
I think that day you can pretty much read it by the order block. But
yeah, I don't know much about like trading Asia,
during the day. Like, let's say it closes after it ran up. Yeah, it's going to retrace on Asia.
That's 243 pips right there.
Yeah, but it didn't retrace over here, Todd, because if that's Asia going up,
we're
just at Leandra, that didn't retrace back down to New York.
You have to look at your order blocks. You can't just say every day it's going to do the same thing. So it depends on what's going on in the market. But the order blocks the order blocks tell you everything.
Yeah, I know that. I'm not saying that. That's not what I'm saying. But to me, a retrace, it's going to go back into New York, and it didn't do that. It went
In this particular
up.
case,
Do you-
I'll start putting something in the chat whenever I see
And
it.
Des, do you know about
Uh-huh.
the retrace? Do you mean like, this bullish candle going up and then obviously retracing back, creating
Yeah, that's in Asia. That's not Asia going back. See, to me, it would be an Asia going back to New York to go up into London. That to me would be more of a retrace than it just going up, up, up. I mean, yes, I expect a retrace while it's going up, but a retrace, well, a
You mean like-
retrace while it's going up is one thing, but a retrace like to go back into New York to go back up. I don't know. I don't get Asia. He's able to do it. I'm like, more power to you. I'd rather wait for London because
I don't get Asia either.
London's doing.
I'll pay closer attention, but I haven't been able to crack the code on Asia.
Yeah.
Des, I get what you mean. Like you want it to come down into this fair value gap, isn't it?
Yeah, or something like something like that. And then okay, I can see that, but this is just either up or it's just heavily consolidating. Oh my God, when it consolidates, like, whoa. I'm like, dude, I don't know what you're doing, but whatever, more power to you, because Lord knows, I'll just wait for London because I can see what London's doing. I can see what New York's doing. I don't know what that's doing.
Yeah, me either. That's the ideal time with my schedule to trade, but I'll blow my account screwing them.
Well, I do know ICT guy had Mike. I should call him Mike by his name, right? He does have on a video I saw on how to trade Asia session. But he does it in pairs, but you have to apply that to US 30 or NAS if you want to trade that.
Yeah, I watched that video and maybe I need to watch it again. I mean, I didn't get, what I basically took from it was, hey, use Asia to set up, London or New York. That's kind of what I took away. I didn't really get how to trade Asia out of it. I guess I need to watch it again.
Okay. Well, see, the only thing I can see, like where she has that, it looks like a talking point line or something, or a talking point. Okay, that's an order block. Oh, I'm sorry. Come down to the fair value gap. No, you're fine right there. Yeah, and there's the blue, some kind of squiggly line to the left. Yeah, that one. So there's a order block there. I guess you can say, okay, let me take the top of that and then go into Asia and go up. That's about it. But other than that, I'm like, I just leave Asia alone. I'd rather it's just, I don't know. Because I've seen it consolidate a whole bunch and I'm just too afraid to kind of like let it sit overnight because it'll consolidate, especially at like 11, 12, and 1, it'll start consolidating to go into midnight and then start working on, London, because midnight is the opening price for the day. And then it'll, London will start doing its thing at 2:00. I don't know who's in at 2:00. Because if Asia session is over at midnight, I don't know who's at 2:00, but it moves at 2:00.
That's when 2:00 your time.
Yeah.
Yeah.
Yeah, that's London session.
Right.
Well, no, London session, I thought it starts at 3. Because at 3:00.
No, it starts at 2. Because it's midnight New York time, which is, I think, 2:00.
What time does London open? It opens up for us at 3:00 in the morning. I know the kill zone time is 2, but London doesn't technically open up until 3.
Oh, is
So
it 3?
like who's there? Who's there? Who's trading at that time?
London is bigger than New York, ain't? I mean,
well, he says, according to him, there's more orders put in during London than in New York, which it's always surprises me. But he says there's more orders going in and during the London session than New York session.
I think it's like that because most of the world is awake, like Germany and all them places.
Oh, okay.
Are more closely aligned time wise with London than they are us.
Well, that would make sense. Because I'm like, who? Because I was always trying to figure out, okay, Australia's at 6 And then London, Asia starts at 8. And then London's supposed to start at 3. And then, we started at 9:30. And I know, we can technically trade 24/7, but it's like, okay, well, who's at 2 o'clock if everybody else is like closed? Who's trading? But that does make sense then. Okay, Europe and stuff like that. Okay.
Even Australia and Asia, they may be closed, but they're still probably like awake. You know what I mean? Kind of like after work during the Asian session.
Okay.
Our market is closed, but we're like awake. So you can still do stuff. So that's what I always thought anyway. That's what I chalked it up to.
Okay. Because I know the algorithm is in there doing its thing, but I'm like, come on now. How many people are here?
So this is New York. This is New York time. So that's the 12 o'clock New York time, 2 a.m. New York time in the morning. And then we move to London. That's 5 a.m. and 7 a.m. So at 7 a.m., I think Germany opened, and at 8 a.m., that's when London proper, everyone gets up, has their cup of tea and is ready to roll.
Coffee.
Cup of tea. Just a cup of tea.
Had to tease the Brit.
Yeah. So I think it's at 7, which is your 2 a.m. That's Germany, I think. What Rashad said. It's Europe. Europe tends to open at that time because have you ever traded German 30 before?
No.
Yeah, German 30 tends to move at 7 a.m. like London time, my time. It moves between 7 and 8. That's what I find.
I got decapitated trading a German 30 one time.
Yeah, I stopped trading it in the morning because it's I thought I just need to focus on one pair that's making me money. That's US 30.
Yeah, those things get to move in one way. And it's, if you're on the wrong side of it, you are going to get taken apart.
Yeah, exactly. So any questions? Anyone? Let me know. Do you need anything? Need to explain anything? Basically, a lot of what I learned from Todd, I learned from ICT. But I guess like the kill zone area is like key ICT.
Yeah.
That's why. Yeah. Sorry, Des, what did you say?
No, I said, yeah, we'll agree with that.
Yeah, that's why I don't trade London session anymore, because ICT, specifically says that in his mentorship, the setups are around this time, 7 till 10 in the morning.
Yeah, because I was getting up on London session to trade, and then I'm like, well, wait a second. If 7, 8, or 9 come back to the 2 o'clock hour, why the heck am I losing sleep? Whoa, yeah, real quick.
I know, exactly. I was trying to go to the gym, get ready for work, plus trade at the same time. I was like, yeah, this is not going to work. I need, a certain time when I'm able to trade. I probably can trade in the evening, US 30, London time is quite good for me. That's why I was asking Rashad, can you trade after work? It's quite good, but I find ICT is right. The majority time, the move happens in the morning, New York Standard Time, Eastern Standard Time. And that, why don't I just, take the opportunity, maximize the opportunity? Why lose sleep, get up so early, go to the gym and try and get ready for work, go to work, when I can work from home and catch moves like this?
Yeah, I think you guys have an advantage. You guys that live in Europe, because you have your own markets that you can choose to trade, but then you have ours when you're not bothered with work to trade if you want to do that. I remember years ago when I was in Germany, there was this dude, I think he was investing more so than trading, but basically he kind of, it was probably a little bit of a one-way market in those days, but he was able to make a lot of money because he kind of knew what the market was going to do because, you know, because they're all correlated. So if the European market was up, then our market was probably going to be up. And if theirs was down, then ours was going to be down. So he just kind of, I just felt like he was, you know, he had a tell, I guess, because of the time zone, you know, and I just always kind of felt like, you know, if you're in Europe or England, that you hold a little bit of an advantage because you're awake to watch things, and you're probably not at work, at least for the American session.
Yeah, I am at work.
Oh, well, you are, but I mean,
I am at work. That's my like. I have to take either a later lunch, or I try and like postpone my lunch till 2:30, where it looks like I'm on my phone. I don't trade in the office anymore. I only trade when I'm working from home, because I find that people just love to talk to me, and I'm like, please move away.
You work at night then?
Night? No, I work in the day.
You work during the day?
Yeah. So for me, you're right. I have got an advantage. I can trade. If I wake up early enough, I can probably trade Asia session, which I would never trade because that's just consolidation, like you said. But you know, London session, I can trade that. Plus I can trade the overlap. Plus I can trade the back end of New York session.
Yeah, I thought, and maybe it's because I was in Germany, but I thought that at least the majority of the New York session was, you know, after work or at night for you guys. Is that not right?
Yeah, so it's
or in the evening time anyway.
Yeah, if you look here, this is London time now. Change it to London time. So 9 a.m. That's when 9:30, the NYC opening bell dings, and that is 2:30 in the afternoon. Lunchtime is normally around 12, 1 o'clock, 2 o'clock. You really shouldn't be eating that late in, you know, English terms, but I like a late lunch anyway. So, and then when you come to probably about 4 o'clock, you've got all 4 o'clock till all this time to trade. 4 o'clock till midnight to do whatever orders you need to in New York session, because the overlap finishes at, I think it's 5 o'clock. London and New York overlap finishes at 5 o'clock.
Yeah, okay, that makes sense.
So all this time, say if you finish work at 4 o'clock, you've got all this time to trade. If you finish work at 5, you've got all this time to trade. I trade while I'm working.
Because you like to trade the morning session?
Yeah, of New York.
Right.
So I'll kind of like do all my work, and then I'll be putting in, you know, wheel strategy plus working at the same time. And then when it comes to 9:30, well, 2:30, hopefully no one's talking to me or wants to ring me. So I'm focused on the charts. And then normally I have like a break for about an hour, and then I'll go back to work at like 3 o'clock, 3:30, and then finish at 5.
It's all good.
So can you take a break in the morning at like 9:30?
Well, I mean, I can take a break whenever, but the problem, like I said, is, so I work on a military base. Okay. And we don't have internet. You know, they do a bunch of missile testing and stuff, and there's probably a reason we don't have, you know, or the internet's real spotty, you know.
They don't want secrets to get out.
Right. So, yeah, I can get breaks anytime. The problem is I don't get a signal. So, or it's real spotty. So I'm just blind most of the time. I remember when me and my brother first started trading, I would get in trades and, I was ignorant and wouldn't use stop losses. I would get in trades and be up $50. And by the time the signal came back, I would be down 300. You know what I mean? So, so for a while, I just quit trading because, I was blind.
Well, see, that's when pairs would be really good for you.
Yeah, I was just literally just about to say that, Des. Like pairs and swing trading will probably be best for you.
Yeah,
now, if you watch his the Market Maker series and apply that to pairs, then that would probably help you a lot better. Because if you know, like say if Monday's down, just generally, if you know Monday's down, okay, his what Todd teaches about the Judas swing all the time. So on Wednesday it's going to change, and then that way you can get in. You don't have to worry about it. You can get in on a Wednesday and pretty much know Thursday and Friday is going to be a down day, or get in Thursday morning or whatever, it's going to be a down day, or use the weekly opening price that starts on Sunday when the market opens and determine then which way the market's going to go and get in then and swing it. But swing trading would be a lot better than trying to do US 30 and you can't even see what the hell is going on.
Yeah.
I agree with y'all on one hand, but the other thing is the trading has to match probably your personality.
But it also has to match what you're doing. And if you can't see what's going on, then
yeah, but I've learned how to protect myself with stops and use take profits. So, while admittedly it's less than ideal, it works. In the early days, I didn't use the stops. I didn't use the take profits. So, I would get severely damaged. Now I use the stops. So there's times when I'm pissed maybe because I got stopped out of something, but my account's not blown. And, I have enough positive days to where, at least to me, it's worth it.
What lot size do you use and how many pips do you?
I usually use a 0.01 or a 0.02. And, I usually get, I don't know, 200-300 pips. So I get pretty good pip counts, but I just don't amp up the leverage because, again, if I'm wrong,
why don't you do London? What time do you go to work? Because then it seems like you should do London, knowing that 3 o'clock generally goes back to midnight price, and then from there.
You can get like 20 pips and up your lot size, and then Bob's your uncle. There you go. You've won for the day. You don't have to think about it.
No, I can think about London. I got to be at work at 8:30. I usually leave here at 7:20ish.
Okay, because I know.
Sorry, what time do you wake up?
I don't know. Sometimes at 3, sometimes at 5. It just depends. I get up early. So.
Because there's a setup where you can at least get about 60 pips every day. I know that with the time that you get up.
So this is the area that you get up and get ready before you leave work. 4 till 7.
Yeah, I would generally say that, yeah. And, like I said, that's where I generally will try to find the high and the low. And, I'll fib it. I'll figure out the 78% place on the chart, or if there's liquidity that I think is within reach, that the market might potentially decide to reach for, then I'll just put my entry either at the 78 or in that liquidity zone, because it usually reaches, 20 or 30 pips below whatever the relative lows or highs are. And, like I said, it'll usually pick me up and you usually run up 200-300 points. And, I generally get out. So as my account gets bigger, I'll up those lot sizes. But for now, it's usually a 0.01 or maybe a couple of 0.01s,
Are you using a prop firm account or your own money?
I use my own money. Because, again, with the prop firm accounts, their drawdown rules sometimes I feel like are too tight,
Well, they're tight for how you trade.
Yeah.
Yeah. So probably if I could be there to watch things and get better entries and not have to guess ahead of time, then I probably would use a prop firm. But with my circumstances, I just think that they will probably be a waste of my money. Unless I figured out how to trade Asia or London.
Yeah, that 3 hours before you go to work.
Yeah.
Or you can swing trade, suit your lifestyle. Your brother swings trades.
Yeah, I think I need to grow in the swing trade.
I think if you try it out on a demo account for a week, 2 weeks, see how you get on, see if you like it. Have you tried it before?
Well, I kind of have tried it, and I just think that it takes too long to play out. And then, especially if you go into drawdown early, I don't want to wait a week only to find out, well, shit, this is the wrong fucking move. Now I'm down $300 goddamn dollars, over the course of a week, so so it's just for me. I just don't think I'm there yet, as a swing trader.
I think practice makes perfect on everything. Like, look at me today. Like, I don't know everything about trading. It's just what works for me. It's what I see in the market, what I've learned, and I'm just applying it. Like, it's not a set strategy. What I've shown you today, it's just literally what I've been learning, and I've been applying it to the markets, and it's played out and it's worked.
Mm-hmm.
I just got to try it and then see. No harm in trying. What's trying gonna do? Can't kill you, can it? If you try.
Yeah, true.
Gotta be optimistic.
So, I think what I'm doing, I think I've figured out how to make it work. I fully understand that I'm not maximizing it because I can't, but I think I win consistently enough to where it's okay, and where I'm not making $2,000 or $3,000, in these trades. I'm making a few hundred, and that's good enough for now. And I guess if I'm patient enough and consistent enough, eventually those hundreds will turn into thousands.
Well, yeah, that's true.
Yeah, that is true. Has anyone got any questions about a prop firm account? Because Des, have you got a prop firm account as well?
Yes.
Yeah, and I think Todd still on here.
Todd left us. Wow. What kind of leader is Todd leaving us?
Not a very good one, I'll tell you that.
Oh, okay.
With his shitty teaching style.
Oh wait, here he is.
He knows he's not a good teacher. We've had many discussions about it. When we were kids, my dad would try to, I remember him teaching us how to do fractions, and my dad was a shitty teacher too. You were an idiot if you didn't get, what he was trying to teach you. He never thought, hey, maybe my method is not good. So in a lot of ways, Watu is not as asinine as my dad, but he's kind of a one-way teacher. It never occurs to him, maybe they're not getting it because
everyone learns in different ways and in different methods. I was talking to someone about this today.
In this case, you're a shitty learner. You can't learn the way I explain it.
Wow.
I get it for the most part.
Okay, that's family business. Don't they take that off?
Yeah. Okay, guys, we have a question.
Yeah.
Alicia, would you like?
Hi, Leandro. Thanks for sharing. I had a question about a prop firm. I'm located in the Caribbean and I'm still on demo, just finding my way and finding what trading style working with which style works for me and which session. Because as well, I have a 9 to 5, so I have to kind of work around which session works for me best. But I've been doing some reading about the firms. I'm still trying to understand the whole drawdown scenario, which account size would be best. Before I go into it. So I'm not sure if maybe you could share from your experience or your recommendations concerning the prop firm.
Yeah, sure. Which Caribbean island are you from?
Antigua and Barbuda.
Oh, nice. Oh,
pretty.
Not far from me. I'm from St. Kitts.
Oh, yes. And my aunt that lives in St. Kitts.
Oh, is it? And Jamaica. I'm saying and Katishan and Jamaican. So yeah.
I'm from Thomas.
So we're obviously coming to you, Alicia, because that's where it's at. So yeah, guys. Right. Prop firms. So have you been looking at a certain account size, Alicia? Like you're thinking about? Are you looking at 50K, 25K? Because we have a few people on the call today, like Des, Todd, who have also got prop firm accounts, so they'll be able to.
I'm just a blank slate, and I'm just gathering information at present.
Okay.
So I'm not open to anything. I'm just looking at what my options are because the entire prop firm conversation, it seems a bit overwhelming and intimidating. So I'm just trying to get an understanding of like the drawdown rules. I've settled on my Forex fund from what I've heard other persons state that's better in comparison to whichever reason it's better than the other firms.
How is their customer service? Has it improved?
I think so. I like their customer
You get
service.
responses from?
I like their customer service because they've got the Discord chat. You can sign up for the Discord chat even though you haven't signed up for a challenge. I think that's what I did prior.
Yeah.
I had an account with them. I blew it, and it was just real hard. You know, when we got to certain points to advance the account and so on and so forth. You know, you wouldn't hear from them for days.
Sorry, is this Rashad?
Yeah.
Speaking, the one who doesn't like
shares
trades US30.
Yeah.
Blindly. But no, they really have changed the way that their customer service is. I found it really good, like really easy to talk to them. But sorry, is it Trinidad and Tobago? Is Alicia from Trinidad and Tobago, yeah?
No, I'm from Antigua and Barbuda.
Oh, Antigua and Barbuda.
Just Antigua. I live on Antigua.
Antigua. I'm sorry, I'm just trying to find it on the chart.
I think on where the time zone is Atlantic Standard, and you could use La Paz. So it's UTC -4.
-4.
Yeah, with the same time as New York.
As New York?
Yeah.
Okay. But you work a 9 to 5, you said?
Yeah, so I'm work while the market's open.
Okay.
So are you only interested in trading the indices?
No, I'm open to trading the pairs. The reason I gravitate into the indices is the same reason Rashad said is my personality style. It's just easier to go in, get it over with, and then come out at the end of the day. Not having to monitor and going back to it. But if the discipline is needed, I am open to trading the currencies.
So do you work from home or are you?
No, I have office job.
Okay.
What I would tell you is that if you love watching paint dry, then yes, trade those.
Oh my God, it's not that bad.
Alicia,
So I was the same way, okay? And when I actually started focusing on it so I can pass and everything, I'm like, oh, it's not that bad because I passed in a day with GJ, and one day with a pair. It's just adding to the lot size. If you want to do that, or if I just had one, it'll probably take me like 2 or 3 days to pass. But I mean, $4,000 for the first thing to, so in a day, I mean, come on, that's not bad.
That isn't bad, but
$4,000 isn't enough. He makes so much more than that right there.
No,
He said he's making $200.
I know, I'm being facetious.
Oh.
And I do okay on my day job, you know.
Alicia, have they answered your question?
I've received an entertaining answer.
But seriously, on a serious note, because
I'm still in the process as well of learning smart money concepts. I recently got a book that I'm learning because I want to understand what it is I'm doing and why it is that I'm doing and making decisions, because the goal is to trade on my own long term. Because even as you imagine, I'm on an island, 108 square miles.
Yeah.
And I don't know of anybody else on the island that does this.
I'm sure
I've seen persons that have spoken about like IML and other companies, but to say it's persons that I've spoken to that are using like even these concepts, I haven't heard of anyone. So I'm trying to understand. So if the discipline is needed to use the currencies in comparison to the indices, so I would have a better understanding, then I have no reservations to that.
I think you definitely have to find what works for you on a demo first. Do not go into a live and
because I use Will's strategy and I've completely understood how it works, and I think that's feeding me, that's giving me even more of advantage in regards to liking it moving fast and quick.
Definitely.
I don't want to like move into the realm of understanding. So as he said, I can just pass to like, prop firm, the phases and stuff on my own.
Yeah, I was in the same position as well. And that's why, thank God for Todd. He taught me about smart money concepts. But like Rashad said, Todd is a very different teacher to most teachers. So, I also watch ICT's 2022 mentorship. It's on YouTube. I'll put it in the chat. I'll send you the link. I think it's all in the education, actually. There's in the education channel on Discord, there's like loads of material, but I would say start with the 2022 mentorship, and also, come into these chats if they're not chatting, these brothers are not having fights.
I'm Todd, I'm going through the videos from Todd, the previous videos.
When you go in from the videos from Todd and watch ICT, it will click. And then when you start back testing as well yourself, it will click. And also Des and Alicia has a lot of materials in the education section that really help as well. So I don't know if anybody else wants to chime in.
So make it be note. Today on the 2nd of July, I'm giving myself maybe a month, 2 months, and then I can add value to the conversation.
Well, that's what I thought, and I'm 6 months in, and I'm doing a live.
Well, thank you so much.
Yeah, I think the ICT videos will help you a lot. I mean, everybody's making fun of me for trading blind, so to speak, but his videos are why I can trade blind, because and be, semi-successful at it.
Is that because of price action? The price action that I teach?
Yeah, because of the price action and understanding where the liquidity is and understanding, the institutions buy at a discount. So, I used to, value the 0.618 level on the fib. Now I don't. I mean, if it's not 78%, then 9 times out of 10, I don't get in it. And that's why I can be successful at it, because you buy at a big ass discount and you're going to lose some. Nobody wins everything. But if you're always buying at a discount, the trades that you do get in, you're going to come out in profit. So, and that's why, finding the swing highs and swing lows, you put that fib on it and you enter at a 78 point at a 78, 79% discount from the top. If it picks you up, you know, you are going to be in profit.
And also I think Des said the Market Makers series is where she I don't know if she wants to say it.
Yeah, the Market Maker series, where video 4. Todd told me to watch the whole series before, and oh God, it was about pears. And I was feeling some kind of way about pears, but when I actually watched,
Thank God for the shitty teacher.
Yep. I know, right?
Don't get discouraged, Todd.
And 4 and 5 clicked, and I applied it to Nas. It was like, whoa, wait a second.
Yeah, it works on any market. It works on any market because they're all
and any asset
charts.
Yeah. And I like that, and it helped me see the movements and understand. And then Danny, he was saying, well, you know, you got to do the kill zones. And I was like, oh God. I said, okay. So I went back and I had, you know, you have to watch his videos sometimes 3, 4, 5, 6, 7, 8, 9, 10 times. Right. But if you apply it and, you know, go by it step by step and apply what he's saying to whatever particular currency or pair, or indice or whatever you like, and apply it, it's like, oh, okay, wait a second. It goes here, and you start noticing different little things, and it does work. I mean, the man's been trading for 30 years. I don't think he's just making up shit.
Yeah, I second what Des said. That's why today I can do what I did because I've watched his videos over and over and wrote tons of notes, back tested, you know, marked up the chart. Like, it's a lot of studying, but it's worth it in the end, especially if your goal is to be, you know, a price action independent trader. I think it's definitely worth studying ICT for sure.
It is worth it. It definitely is.
I mean, Todd does teach it. I won't say he doesn't. He does. And, you know, it always depends upon, to me, someone can say something 5 times and you won't get it. And somebody else says something and they say it just a slightly different way. And you're like, oh, okay, wow, I see it now, you know? And so it doesn't matter how many people teach you or how many people you get it from. At some point, something will click and you'll retain it and you'll be like, okay, yeah, I see it. I get it. It's not as hard as I thought it was. And it'll just come together. So, you know.
Right. It's not that he's a really a shitty teacher. What I mean by that is,
okay.
You know, well, where I go with it is if I try to explain something to you and you're not getting it, I have to tweak the delivery. You know, I mean, I can't just keep telling you in the same manner. You know, you're not receiving it. You know what I mean? So and that's where I go with it. You know, when I give him a hard time about not being a good teacher. So, you know, he's not a bad teacher. He just gets kind of one tracked, you know, sometimes. But Des, one question. You said something a while ago. You were talking about amping up the lot sizes on the prop account and how you qualified it, you know, trading pairs, I guess in a day or whatever it was.
Yeah.
I mean, but the other side of that is they don't give you much space for drawdown. So if you're amping those lot sizes up too much and you're wrong,
well, I was
big problem.
Okay. Well, the only time, okay, I'm gonna be full disclosure. Now I'm almost about to lose the account because I was revenge trading because I got pissed off because I missed my TP by 1 pip, and it was simply because of the spread difference. I was pissed off, so then I started trading with a bigger lot, with a $15 and $20 lot, so I could make it back real quick. Yeah, don't do that when you're pissed off. Did not work out. So now I'm back to $2 lot and everything because I'm trying to make it back and recover what I lost so I can get paid. But just using a one, well, with pairs, I was a little bit more cautious because the $2 is not $2 with pairs. It's a little bit more. So I was like, okay. So I did what ITC said was like, started out with like a small lot. So I did a 0.10. And, it was like, okay, yeah, things are going great. I still see it going down. Things are, or actually it was GJ, so it was going up. I still see it going up. I said, okay, fine. So I just started adding, and I'd add at the retraces, and I'd add at the retrace of when he said to add at. And that was during, after New York's first, then start adding different more lots. And that's what I did.
Yeah, maybe I need to watch that episode 4. Yeah.
Is it episode 4? Market makes.
Yeah.
I have to go back and watch that as well. Oh, also, I wanted to add when I knew price was going to be bullish, is because Powell was speaking. I think I was speaking on that day.
Oh yeah, let me tell you about Powell when he talks.
Yeah, Powell was
My
speaking.
thing is when he speaks, I firmly believe that the market prepares itself. I firmly believe that there's no way the people who are responsible in putting their money out are not going to sit up here and make sure they know what's going on, what he's going to say, and what every other banker is going to say across the world. They know already. They know what the forecasts are going to be, so they prep themselves. Okay.
Yeah. So 1 second, Des. So if you look on, so that was the 24th was Friday, and the 23rd was Thursday, and the 22nd was Wednesday. So you can see price didn't move. I thought it was going to run up into this order block on Wednesday, because you can see, the wick as the price went up, but it didn't go all the way up. So I was like, okay then. So that's an indication, okay, cool. Next day, it might go up further because Powell is talking at 3 o'clock. Even though you did get, some good moves here, it didn't happen again. That was another indication that, okay, cool, Friday, price was just ready to push up. So it pushed up through this fair value gap, because I got that from ICT as well, that when Powell speaks, price moves. But yeah, carry on, Des. And that's the last bit I wanted to say, about the news and everything. Yeah.
I guess what I don't understand.
Des, you can carry on.
Oh, I'm sorry, I was muted. Yeah, this pretty much happens all the time when he speaks on that. I think it's on a Wednesday.
Yeah, he's
at 2 o'clock.
Multiple times that week, and I was shocked because
this one particular time, I think it happens every month. FMOC or whatever, and he talks at like 2 o'clock. Okay.
Yeah.
Give the meetings of the minutes or whatever they're going to do. Okay. What you'll notice on that Wednesday, price will go up or down, doesn't matter. And price, when he speaks, price goes right back to opening price. This is on NAS. It'll go right back to opening price, then goes up.
Okay.
On US 30, it'll pass the opening price and then go back up or down or wherever it's going. But you can chart that out because actually on video 4, that's the actual time that he actually does it. He's giving that that FMOC talks that day or that week, and that's the actual chart that he's using that week. Okay, so and then you can actually see it if you go back and watch it, because it happens every month like clockwork. Everybody kind of goes crazy with it, but if you watch it, it'll go back to opening price or below it. For US 30, it'll go below or above, wherever the price is at, doesn't matter, but it'll go back to opening price and then go wherever it was going before. It happens every month, seriously, without fail.
Yeah, I traded one of those. Maybe it was the last one, and that's exactly what happened.
Mm-hmm.
Yeah,
but it happens all the time. It's almost like you can bank on it. It's going to go back to opening price, and on US 30 it will surpass opening price, because US 30 like I said, US 30 and NAS pretty much move in sync, except US 30 is, to me, it's bigger or heavier, so it'll go a little bit further than NAS will go a lot of times.
well,
but
it's less think of it like a mutual fund. If you got a mutual fund with like 1,000 different companies in it, the price moves. But if you got a mutual fund with 20 companies in it, then it's going to move more. So the US 30 has 30 companies in it. The NASDAQ has 100. So that's why the moves in the US 30 are more exaggerated than the NASDAQ. That's why the NASDAQ is more exaggerated than the S&P 500, because there's 500 companies in the S&P. So, you know, they all move the same, but the moves are bigger in the 30, and the NASDAQ is usually in the middle, and the S&P is, you know, you get the smaller moves.
Okay, that's okay. I didn't think of it like that.
Right.
Okay. This is what Des was talking about, this black line, make it a bit thicker. This is the 29th, and then this was this week just gone. Fed, oh, that's not FOMC. But
yeah, it's specifically FOMC. It's specifically that one.
Well, he talked at 2:30, and sorry, was it 2:30 or 2 o'clock? 2 o'clock. It ran up, went down. This is the opening price, this black line. It came down to this black line again. The day after, displacement.
Is that when he decided to raise interest rates?
This is this week. This is the 30th.
But this one is specifically at FOMC when he talks at 2. So whatever, and I think it's once a month that he does that on a Wednesday.
Not this one.
I remember, but him.
Yeah. Not that one, is it? No, that's president. Is it the start of the month?
It may be, because I know it just happened.
Well, every time he speaks, it seems like the market just moves. Oh, FOMC meeting minutes.
Yeah, that's a Wednesday at 2 o'clock, right?
Or
If it's not
7 p.m. my time.
No.
I guess that might be 2 o'clock your time. I don't know.
No. It's definitely the 2 o'clock. Well, I don't know what your time is.
Well, she's in Europe, remember, so it might that's probably is it, because she's way
Okay.
ahead of us time wise.
Okay.
I think you guys are what, 6 or 8 hours ahead of us?
Well, basically, the market is price action, but I think you need to put in there time price action, because it's a lot of timing of the market as well. And that's because of the algorithms. People are not that precise, but the algorithm is. So I think it makes it a little easier to trade because the algorithms are doing specific things at specific times. And then, oh God, and then, Jesus, then the market maker, you know, the people that actually own the Forex, they're not going to lose their money. So they have prepped themselves, and the market will move in preparation for whatever news is going to drop.
Yeah, like before the FOMC, I noticed it always consolidates, you know.
Yeah, a little bit before time, yeah.
Yeah, and the other thing I think that I've noticed, and I don't know because it hasn't happened enough, is like if you have big down moves or big up moves, when it's getting ready to change directions, it kind of comes back to equilibrium, you know. Like, let's just say, I'm going to throw out some exaggerated numbers, but let's say that the Dow is at 35,000, and over the course of a day or two, it drops to say 30,000. And let's say it's gonna move back up. It comes back from like 30,000 to like 32 and a half. Because if you look at if you pull up like, I don't know, the 4-hour chart or the hour chart, and you squeeze it down where you can see like the last 2 or 3 days, however, the day that the big move started, you can see price start at the top and go all the way down to wherever at the bottom and come back to kind of equilibrium, you know. And when it comes back to equilibrium, I think in most cases, it's going to go back towards the top side to, you know, fill all those fair value gaps and grab that liquidity on the top side. Like I said, I haven't traded it enough, and I haven't seen it enough or paid attention enough to know for sure. But I think I've observed it like twice, and quite honestly, I've been burned both times because I didn't trade it the right way.
Mhm.
But I think that that's what's going on. And the next time something like that happens, which we should get a move like that, I'm guessing probably in the next 60 days, I'll just bring it up in one of these sessions, these Saturday sessions or whatever.
Okay. Yeah, July 6th at 2. Okay, that was it. So if you go back to that time frame, you'll
It hasn't
see.
happened yet. That's next week. This is.
Oh, that's next week. Okay.
Yeah.
Oh, July 2nd. Okay. Jesus. Well, June. It happened in June.
Yeah.
But yeah, that's the once a month thing that they do, FMOC meeting minutes. Yeah, at 2:00. And you'll see the market either buy up or buy down, whatever he's going to say. They already know. And then it'll go right back to opening price.
Oh, okay, that's once a while.
And that's something you can pretty much bank on.
And then after that, you've got
Better be saying he's raising interest rate.
on the 13th. You've got.
I mean, I gotta admit, I was thrown off one time when I think it was when he said he was raising them to 75 basis points.
Yeah.
And the freaking market like bought up all hard and shit. You know, I mean, that to me was a counter move. And I think it did sell back off maybe in the next 2 days, but you know, I would have expected it to sell then because high interest rates mean sell. But you know, they supposedly liked what he said and it bought up all hard that day. And I think that's one of the days where I got my clock cleaned a little bit.
Didn't he come back and say then he was going to raise them another point after he said he was going to raise them 0.75 basis points?
I don't know if he came back and said anything, but I just know 75 basis points, you know, it was a lot. It was like the biggest move in what, 30 or 40 years or something.
Mm-hmm.
And they bought that shit. And I guess they liked it because it means we're battling inflation, but that is bad for equities.
Yeah.
And so that's why I was a little confused as to why they bought it, but you know, they bought it. So,
yeah.
You know, it is what it is.
Well, did they buy it just to go up to start selling off again? You got to look at that.
Well, yeah, that's ultimately what happened. I think it sold off either the next day or maybe 2 days later,
Yeah.
but you know, so I think I was right, but my timing was wrong.
Yeah.
So, you know, I mean, it is what it is.
I got to find this other chart I did not. I had to.
You want to share your screen, Dad?
No, I'm still trying to get this laptop back. I got the iPad going, so I'm trying to get the laptop back, and some stuff is missing.
Oh my gosh, that's crazy.
Yeah, but that's okay. It's a couple of things, but one important thing I had just did was a ICT time price. I had wrote out like monthly bullish, focus on buying, and the weekly bullish and all this other stuff. And there was a little blurb I had about Asia. Now I can't find it. So
do you write them in notes or do you?
Yeah, I wrote them in notes. I wrote everything in notes. Now I wish I'd actually put on pen and paper.
Do you use Google Docs?